I'm not doing too bad.
Good, good. Right, okay. Yeah, I just obviously we need co-hosts and stuff just to go through this. Catch is on tonight, obviously, to go through any Safe Moon stuff. Yeah, tonight, we've got 8 days before the next AMA. We're talking about newfound wealth. What you're gonna do when you find yourself with, a large amount of money. Your wallet's going to increase in the next, 12 to 24 months. I've had a lot of people message me in the last week or two. And since we've been going through these spaces, just to touch on, what you do regarding. We're not going to talk about tax because tax is obviously different in each country, but we're going to go through um, just basically what people have been through to get to where they are, and how to cope with wealth that you haven't had before. So, how to stop yourself from wasting money on advice that you might not need. Buying things you can only dream of 12 months before. What the pitfalls are. It doesn't matter whether you hold 10 million Safe Moon or 100,000. Percentage wise, it's all relative, to your initial investment. What you've personally afforded at the beginning. So someone's life changing money could be, $10 million. Somebody else's could be 100,000. You know, Either way, you need to navigate your way through that, and it's complicated. Um, this isn't just about SafeMoon. This is about any cryptocurrency that you hold. Um, 5 years ago, the whole market cap of cryptocurrency was nine. Let me just get Scott up here. I can see he's just come in. It was 9 billion. A couple of months back when Bitcoin was at 69,000, the market cap was 3 trillion, and that's only 2 to 3% adoption. So in the next 5 years, when the adoption gets to 10, 15%, we could be looking at 15, 20 million, 20 trillion market cap. So you'll be seeing a lot more money flying around, in the coming years. What I'll do is we'll go through the panel now. I'll introduce everybody. As I said, it's called How to Deal with Newfound Wealth. On the panel, we've got five individuals in the house. They've been there, they've done there, they got the t-shirt. First up, I've got a long-term friend who's sitting next to me. It's a bit weird. I'm talking to all you guys. I'm talking to him, but through my phone, and he's sitting next to me. He's got a wealth of experience, 30 years of doing what he's been doing, building his business up to being very successful. He's been an MP in the British government. He's been a business commissioner. I'm not going to say his name, but he's sitting next to me. How are you doing?
Oh, very well, very well. Nice to come along tonight and happy to share experiences and just the journey, really. And if it can relate to anybody, I hope it can make a difference. Simple as.
So as I say, he's sitting next to me now. I've known him for a long time, so he's got some good insight into business. He's coming here off the cuff. He's literally just come from a wedding. He's turned up in a suit. I think he was a bit disappointed that he didn't realise that he was going to be on TV. So that's great that he's here. Second up, we've got a senior Safe Moon representative. He's got a new job now. He's called the Communications and Education Manager. Everybody knows Katsaras. He's here for the Safe Moon questions, that will come up all evening. How are you doing, Kats?
Yeah, I'm not doing too bad. It's actually nice to teach people about what they're going to do. So that's always something you need to realize. It's all good and well thinking about what you're going to get, but it's what you get and what you do with that once you get it.
Yeah, I had to write down your new job title because I just knew you as the senior moderator. So it's great that you're getting some recognition for what you've been doing in the last few months. It's good. It's good. Okay, next up on the panel, we've got a long-term trader. He's at J Blue Harrison, Safe Moon Farm D. He's a business owner. He's been investing for 18 years. He's won a lot. He's lost a lot. So he's the ideal guy to have in here to go through any pitfalls of what he's done in the past and what you guys are going to be seeing in the near future. Good evening.
I appreciate it, Randolph.
No worries. Keeping all right?
Yeah, go for it.
Okay. Third up on the panel, we've got, as I like to call him, he's the Robin to Batman. He's a business partner. We've got Derek. Derek Ride. We've had a couple of interesting conversations last week regarding what Derek and Scott are doing in regards to events that are coming up in Utah in the next 12 months. Derek's been doing big things behind the scenes. He's been on a lot of spaces in the last few weeks, obviously listening, talking a bit as well. And it's good to have you on board, Derek. How are you doing tonight? Or is it what time is it with you?
Yeah, it's just after 1 p.m. for us here in Utah. We love it, man. You know, I'm excited to be a part of this.
Good. No, it's good to have you. To have like an insight into behind the scenes stuff that you've been doing with John in Malta and stuff like that. Last but not least, we've got Batman to the Robin. Scott's in the house. Scott Paul. Scott's a serial entrepreneur. He lives in Netherlands, leaning into his strengths such as hair influencing, one-wheeling, and giving away cryptocurrency. He's set out in his pursuit to spread the word of crypto and give away as much as possible. He's an angel investor in lots of companies, and he's taken SafeMoon to heart in a big way. And it's great to have you on the panel tonight, Scott. I will say that you probably can see the 3 or 4 sentence intro that Derek gave me.
Yes, and I'm happy happy to be part of this space. I haven't done spaces for about a week, and a lot of the conversations were kind of getting all over the place and not really going towards anything. So I like to see this pre-planned with a objective, and I really hope we can get some breakthroughs in the next hour.
Yeah, of course. Tonight's format's a little different, to normal spaces. We've got a panel of experts up here. So I know it'll be specific, relevant questions. To achieve this, I've asked some of the leading lights in the SafeMoon community, the people that run the spaces. You'll hear the names coming up in a bit. You'll have seen them. They've done it. They have 300, 400, 500 people in their spaces. So no doubt they'll have questions from their followers. We've also got leaders from the SHIB cryptocurrency and Satama. They'll have their perspective on it as well. And we'll also have the AMC army that come across from the stocks and shares side, because they've been coming into the community this week. So it's combined, community effort. We got Rowdy, we got Shib Nasty and Crypto Hodler. They're from Shib, and Ninja as well from Satama. So we'll crack on. I'll bring up a few of the speakers. As I said at the beginning, there's no advice on tax, because there's no specialists in here, because every state in America has got different tax laws. So that's a minefield. There's nothing on here to do with financial advice. This is just it's entertainment purposes only. Take it as you want. And that's the way it'll go tonight. So what I'll do, I'll bring up Nasty, if you can request, Dreaming, SafeMoon Young, if you can request, and I'll bring the 3 of you up here, and then you can ask some questions to any of the panel. Just get a few of them up here. We've got Brian, Dreaming, just waiting on Nasty. So if we got so we start with Dreaming. How you doing, SafeMoon Dreaming? You okay?
Hey, how's it going, everybody? It's a pleasure to be up here. So I have a question in regards to, you've made your money with your newfound wealth, and how do you seriously not lose it? So I do know that there are people that you can hire. Hypothetically, let's say you're holding on to $100 million. Okay. And it's all over the place. Do you hire actual estate managers, or who are the specific people that you hire to help manage your found wealth? Or do you there's got to be somebody, right?
When you say it's all over the place, do you mean in different wallets, or how do you mean? So if you've got 10 million in different currencies, how do you mean all over the place?
Well, let's say, you're managing your various assets. So let's say you've got some real estate investments, you've got your crypto investments, you made your money and you spread the investments around, and now you're trying to manage it. Are there specific people that you can hire to help you make sure that you don't screw up?
Okay, on the
Can I answer this?
Yeah, fire away, Scott.
I had a public exit, so I sold a company, and it was stated roughly how much was the founders made, and you will have no shortage of 400 people, wealth managers, who are doing anything they can do to get you to manage your new wealth. And you make an estate, you set that stuff up so your people, your kids or family all have a plan. If you die, where it goes, you usually get life insurance. You go, and there's literally a roadmap, a game plan of what you do when that happens. And there's so many people. The problem is not finding the people. The problem is finding the right people who have your best interests in mind and actually have a good investment strategy and have a holistic view of managing everything. And most groups have nothing yet on crypto. Few of them even do, real estate. A lot of them are just want to take your money, charge you several percents to have you put it into stocks, bonds, private placement things. So that is not a problem. If you want someone to manage your money, there are sharks out there who will come and find you if you're not looking.
So
finding the right groups is hard.
Scott, have you found that it's better to have somebody help you manage it, or is it better to just keep it within yourself and then you don't? I mean, it could be a lot of your money all over the place. What do you suggest?
I believe that self-manage is, if it's something that interests you and you enjoy that you will probably do better self-managing, and meaning finding your own investments that you do on your own. But there's just a lot of, how do I say this? You're going to get a lot of help with people that, like, there's no way you can learn tax codes in every unique way. There's no way you can learn all the things that you can do strategically to protect your money, to make sure that it's in good hands, that you're doing the right things to have tax-friendly outcomes later on. It's all individual. Everything that you do once you have money is actually going to be built by your preferences and who you are and what your relationship with money is. And so I can't actually tell you what that is, because what you want to do, you might want to set up a foundation that gives a ton of it away to kids in West Africa, or start a reading program at the local university. Or you might want to hoard it all and invest in a ton of startups. That's what I did. I did not maximize charity. I went in and said, the thing that I can do the most effectively with my money is give it to founders, because I can help them with more than just money. So you need to plan right now what it is you want to do in your life and what your magnum opus is for when you have money, and then you'll find the right people who can help strategize with that and get you those goals.
That's great advice. Scott, did you find that when you decided to help people out that you were setting up CRTs, charitable remainder trusts, in order to do that, or were you just donating directly and taking the write-off?
Yeah, I just donated directly to a few organizations, about 10% of my income, and the rest was just direct investments and angel investments into startups that had no charitable. Unfortunately, it's sometimes angel investing can feel like charity work and donation, because you often lose all your money, but there is no 501c3 or any form to let you write that off. I mean, you write it off as a loss, but no, I haven't done any CR2, or I don't even know what that stands for, to be honest.
Oh, those are charitable remainder trusts, where well, if you want to know about it, we can go into it later, but I appreciate you answering my questions. Thank you so much.
Yeah.
Dreaming, I've got a real estate specialist here who's just going to go into it a bit more regarding the property side of things.
So I'm
Oh, that's great. Thank you.
so I'm going to kind of echo some of the sentiment that Scott expressed, but give it perhaps a slightly different tint in the sense of perhaps a more European perspective on stuff. And I would agree with the view that you will have no shortage of folk who will come forward and give you all sorts of advice. For me, just on that, to make that really nuanced and really, really specific, I was very fortunate. Well, actually, let me park that. There was a bit of research and a bit of family contact as well. I found that kind of Goldilocks thing that you need to find with, I think, investment advisors of, just the right size to actually give a damn, and also to be quite reasonable and just give that advice which involves you as well. So it is very much a personal thing here. You mentioned, like, should I be hands-on this or should I kind of delegate? And my own personal take on that is making money can be fun. I'm assuming it is. Generally, you find when you're good at something, you tend to enjoy it, academically, financially, whatever, or from a sporting perspective. So cutting that off and then taking a complete hands-off approach can actually be quite unfulfilling once you've done that, because you've got to have that exit plan in your mind about what's the next thing. And I always had that. I was doing X, Y, and Z to achieve ABC, but there was always my little secret, my little friend in the back of my mind, which I didn't really share with anybody, about where I am on that map, how far I am, and how I'm executing those plans, because it's really personal. I don't know whether Scott would agree with this, but look, I'll share this. I've got 3 kids, and my business has always been my 4th child. It keeps me awake at night. It gives me a lot of grief, but it gives me a lot of love as well. So the welfare of my children and long-term the business is something that I've been quite emotionally attached to. So that's just my sort of take on it. Look, it's not, perhaps I'm stating the obvious, but it really is a bit of hit and miss. But if you can actually find somebody who's been through that journey and sit down and speak to them about it, that's the best thing. Word of mouth really does cut through a lot of wasted time.
Does that give you a good insight, Drewman?
Oh, absolutely. I really appreciate that information.
No worries. Any other questions or anything on crypto or SafeMoon for Cats? Or obviously you got Scott up here as well. Anything on that?
From me, no, not today. Thank you.
Okay, no problem. Thanks for the question, Dreamin. That was great. Okay, next up we've got Brian. How you doing, Mr. Young?
Good afternoon, everybody. Cats, Derek, Scott, everybody. Ninja, how's everybody doing?
All good, all good.
I got to be quick here because, as you know, I'm going to the Big Ten title game, so I just got to my hotel.
Yes, yeah, fire away.
I got to get my questions and go. Probably my biggest one that I've gotten from my clan is what percent. Okay, so say $100 million, okay? The biggest question I probably got on multiple occasions is what percentage is to split that up, and realistically, how many ways are you comfortable splitting it up? So in other words, like Randolph, I apologize, I didn't catch the name, but like your friend's, big in real estate, and Scott's an angel investor, right? Like, how many different ways should you split that money, and is there a giving pattern to choose which is the best way to go?
Okay, we've got a Farm D first, because I know that he's invested in lots of different things in the past. What would be your take on it, Farm D?
Yeah, it's a really tough question to answer for other people, right? Really has a lot to do with your risk tolerance and what makes you comfortable. I tend to have a little bit higher risk tolerance than most, and so I tend to let a lot of things ride, probably a little further than some would. But it still comes down to each and every one of you. There is kind of this threshold, though, right? When you really start to think about this. And that number kind of changes from time to time. You hear different things, but around the 20 million mark, maybe 25 million mark is where you have to kind of work a little harder at screwing it up to go broke. And so you've got to figure out what that threshold is, and that's going to have, it's going to change your approach. It then becomes a little bit of a preservation mode, and what you do with it, and anything over that amount, then you can play with. But I think that's what you have to figure out first and foremost is where do you want to get to that you don't want to go, you don't want to lose, and you don't want to go back past that line, and then go from there. So I just think it's a very individual thing. It has to do with your goals, and you're probably going to hear that a lot from the panel today. It's totally up to you and what you're trying to accomplish in this life and for generations beyond.
Yeah, that's a great answer. Anything to add to that, Scott?
No, not at the moment. I actually, this is all wise advice. I love everyone else's opinion here, as we all have different experiences how we come to wealth and that number of what it is. So I'll let that answer be the one that we give Tim. I think that was, or Brian.
No, you're fine. Yeah. Another question I've gotten is like, okay, what do you guys find to be and listen, I understand markets and things play a role in this question. So obviously, again, I'm probably not going to be able to get a correct answer. But like, how do I word this and not make it so vanilla? Where you're going to get, where you'll feel like you'll get a larger, okay, so 20 million farm mentioned. Okay, so I have $20 million. I found the person I trust to do my investing. Is a nonprofit maybe a better route, or what would maybe be my best route for the long range return? Now, obviously, I know like real estate and obviously the market fluctuates, but let's act like everything is equal. What would be the best probably long term investment with that 20 million? Would it be just putting it in something that gets 8-10% return? Is real estate the better route? Maybe I'm not asking the question right.
You're asking a question of like, what's a good, down the fairway strategy to preserve wealth for the long term?
Yes.
And that's what everyone, I think that's the default, is that if you get a $20 million exit, you want that to be life changing and potentially never have to need again. And so what you would want to do there is a mixed, diversified bag of different assets that could be pretty valuable in any type of turmoil, of market turmoil. And that would absolutely be things like life insurances that are backed by bonds, and they're really low returns, but been around forever. And then and they have tax help, and then you get your real estate, and then you get your equities in the stock market, and then you get your crypto, which is a big one. Crypto was only 5% of my net worth, and that until it became 80% of my net worth. And so now I have to rebalance it. The guy who runs my money is mad that I have too much exposure to crypto. And so he's trying to get me to rebalance it and get some out into other more stable things. And the whole approach is that you have a balanced portfolio that achieves the goals that you want, which would be stability to pay for your family, do everything you need if you were to pass or be incapacitated, or and again, it's a lot of your goals. If I want to go buy an NFL team, I better have much riskier portfolio. I better be doing some crazy things. If I want to have a farm and retire, I just need to make sure I've got, a nice chunk of income coming from that 20 million in perpetuity. So I think there is no right answer, but it's that we have all these assets in the world that we can go out and build a portfolio strategy that's diversified and hopefully bulletproof, so that you can get through all sorts of ups and downs. The problem today is that people don't understand this, and investing is really one dimensional. I think people go all in on buying sheep or something like that, and that's just not a great investment strategy for anyone. It's a good lottery ticket, but it's not a way to build generational wealth in the long run, just being in one single asset. And so I hope on this, since there's a lot of safe mooners here, is we can talk about, you know, what else are we doing besides the SafeMoon investment, because it's a great one. I have it. It's good to have in the portfolio, but I don't think it should be more than 20% of anybody's portfolio, and that's already pretty aggressive.
That was actually going to be, you kind of answered, man. That was going to be my next question, actually, was more related on the crypto side. How many, again, I understand it depends on the individual. I get that. But you just said 20%, right? So if you say, you're saying 20% is high. So with that, you're saying you should be split roughly between 6 or 7, if my math is holding me true, right?
6 or 7 of what? Crypto?
Different cryptos, because you said 20% was kind of high.
Yeah, I mean,
So
I don't like, you'll find that I'm a heretic in all things because I'm already going against, I tell people to go crazy with crypto because I think that this is a once in a 1,000 year like experience that we're all going through, and nothing that we know from the past can be used really to dictate what's about to happen. And so all the investment advice that anyone can ever give you, you can almost throw it out the window with what's about to happen to our world. With that said, I don't want. There are some fundamental truths where I do believe you try to build a balanced portfolio so that you have like safety, and so maybe if you're all in crypto, well, make sure you have balance in crypto. Make sure you have stable coins that are staking in Gemini and some Bitcoin and Ethereum. Then you have your risky tokens and you have your DeFi products. You have your NFTs. Go get balance within crypto if that's where you want to do all of your work. But again, I don't want to. I have no investment advice. Honestly, this is all. No one can predict the future right now at all. And it's a wild time to be alive, and that's pretty much what all I talk about is. But there are some principles I think that just have been working for a long time that I hope that we can leave with, and if we leave with these principles and understand them, we'll be able to like hopefully have more mental health around the ups and downs of these of our favorite currencies, our favorite tokens, our favorite investments. If you have hedged yourself, you don't get as crazy upset when you see Black Friday sell off of all the cryptocurrencies like we had yesterday.
No, I actually woke up licking my lips. That put me in a good mood right away. I love red. But you guys have been great. I got to head to the stadium. Derek, Scott, Katz, Randolph, Farm, appreciate all of you. And we will talk soon. I got to go Michigan.
No worries. Cheers, Brian. Ninja, you've got some questions. How are you doing?
Hey, Randolph. How you doing?
I'm good.
Let me start by thanking you, Randolph, for hosting such an amazing space, bro. You always, blow me away with your spaces, man. A great opportunity to learn, and great opportunity for newcomers to this space, even for existing holders and people with experience. Really, really amazing. Shout out to everybody on the panel: Scott, SafeMoon Farm, Derek, all of you guys, man. Cats are us. Thank you for being here, and to your friend Randolph, who's sitting next to you. Thank you so much for holding this space. So I have a 3-part question. However, somewhere in the conversation, the second part and third part were really answered, but it would be great if you guys want to touch on them again. However, being in the space, usually early adopters that come and get into a project, and they're very early. And as the community builds up and as that token, gains value, what would you guys say about healthy exit strategies? I have some experience in the financial industry, and I see sometimes in the stock market there'll be off-market trades in order not to impact the market price or stuff like that. But we tend to see in crypto, this high volatility. And I understand, nobody has control on this, but maybe if we bring some education on some healthy exit strategies, Scott, maybe you can touch on this, or any of you here on the panel. And maybe after that, I just have one more question for SafeMoon. What is that one takeaway or one thing that, Cats R Us, you would like to tell us about SafeMoon that we as new investors or existing investors, would you like us to leave here taking that into consideration? And thank you again, guys. Thank you so much.
Yeah, Scott, if you want to answer that question, the first one.
Maybe repeat real fast just the first question. I think I might have Derek even
Sure,
answer it
sure.
because well, I think it's like, when do you take your gains?
No, it's more like healthy exit strategies. Let's say an early adopter, joins the project, and as the community builds up and value is injected into this one token, and they tend to maybe let's say they dump or something. I was just wanted to touch on healthy exit strategies. If you think any thoughts on that?
Yeah. I think I know where you're going, and I actually have a story to tell that from talking with John this morning. Actually, I am so. This is going to sound crazy, but I'm really excited for the person who sold and puts $50 million in their wallet, and so is John. And here's the reason: we have reason to believe that that was a shift worker in the UK who just had a life-changing experience. He did his win Lambo moment, or she. We don't know who it is per se, but we have reason to believe. And who are we to sit and get on that person's case? They just did what all of you want to do, which is have a moment where you realize gains and you change your life. You have a life-changing moment. And here's what's crazy is John is so excited for that person. He believes, he's like, look what SafeMoon can do for people. And it's going to happen again. And we're all going to be able, the more people come into this, but like, that is the goal, is that we can all find wealth in these currencies, and that we can change our lives, and we can move ourselves into a different income bracket and a different stratosphere. We can alleviate some of the grind of day-to-day paychecks. And so I thought he was going to be super pissed, and in a way he's like, this is what it's all about. And I'm like, wow, that is a way elevated way to see this. And it makes me think about, what should we be thinking, like, what is an exit strategy for this? And Derek has a different one in a way, because he is paid in this currency, and he has to figure out every day, how much do I keep, and how much do I go and use in daily life. He's having to balance the decisions and the choices he makes to purchase things, because every one of those purchases comes with opportunity costs that he believes is somewhat sacrificed if he takes it out of the projects he believes in. And I don't know if there's I don't know how we answer this question of when to exit or when to take a position. What I would hope is that everyone builds a plan to uh, better their lives. And so if you have a big position, it's absolutely okay to take some off the top. I do this with Bitcoin almost every 3 months. I take a little bit off the top for living expenses, and I have to pay stupid amounts of taxes on it, but it's how I have to live. I don't have an income. My income is crypto, is yields in DeFi and the crypto that I hold for the last 7 years. That is it. I don't get paid by any company. I don't have any. I'm not on any like the way I have exits is from me choosing what crypto to sell. Does that make sense? And so there is so many different ways to look at this, but we all have to have that plan right now. And there's nothing wrong with exiting. It doesn't mean you're not your paper hands. You should be wisely figuring out the ways to shift around and rebalance your portfolio and take some gains. That's what investing is.
If I can just add a little, just to clarify, Scott, maybe you can kind of understand more where I'm coming from. So this community kind of helped that person, and as a community-driven project or community projects like SafeMoon or like Saitama, I have a feeling, that person would have some responsibility or some sort of gratitude towards the community for maybe helping him towards that goal. But yeah, I hear you out, my friend. I definitely, if I realize my gains and it's life changing for me and for my family and for people around me, definitely I'm gonna take that position for sure. So yeah, I understand what you're saying.
This person, we have reason to believe he's in a Telegram group that I'm acquainted with, and this person didn't mean any harm. They didn't even know until a week ago they had it. And So I don't think they probably had the same like feeling that they were dishonoring a community or anything like that. And honestly, the only reason it even makes a dent is SafeMoon is still a small community. We will be at tens of billions of dollars of market cap where that won't make a dent. That's where Bitcoin is right now. Governments can hardly make a dent in Bitcoin right now. I mean, they can with like their legislative scares, but like El Salvador can go buy up billions of it and it doesn't, and or dump billions of it, and it doesn't move like what we had with One Whale. So we just need to get we just all need to be long on SafeMoon, and we will eventually build a robust a robust currency and protocol and network that it won't matter when you have to exit a position. It won't have that effect, and you'll be able to do that. And we won't look at each other as like surrendering or giving up on the community that helped them get there. We'll actually be happy and excited for when people take SafeMoon and go and buy that Lambo or go build that house.
Derek, what's your take on that then? Have you got like an exit strategy or a plan in place for certain price points?
Well, I'd like to just talk on one thing. Scott and I, we held, with one of our other friends, we held a cryptocurrency 101 class this last week. And one of the principles that we teach in that class is we said, if you decide that this is a good investment strategy for yourself and you want to hold Bitcoin, we should all become whole coiners, meaning you should strive. If you believe in cryptocurrency, you should strive to hold one Bitcoin. And then this gentleman from the crowd, he kind of, he pipes up and he says, okay, cool. But does it have, like, when do we use it? Like, if this stuff's supposed to become currency, when do we use it? Right. And it was this whole thing like, well, if I have one coin and it's worth, $100 million in 25 years from now, who cares if I never spend it? And so, I thought a lot about that. And I think what we as a community need to realize is if cryptocurrency is supposed to do what we think it's supposed to do, which is become a digital currency that we use in place of fiat, we need to realize that it's okay to spend and it's okay to trade and it's okay to use this as money. If we forever see it as an asset, it will remain an asset. And I think lots of people worldwide are pushing for this to be able, I want to take my SafeMoon and I want to purchase my Lamborghini in SafeMoon. I don't want to have to exit it ever, so to speak. And if commoditized items, like if I want to go buy a pair of shoes, if I can purchase that pair of shoes in SafeMoon, I'm going to do that. So our world has to change a lot before I think we can realize the full potential of what SafeMoon is, and cryptocurrency in general, right? My portfolio is about 2 or 3% SafeMoon, and I love it. And then I have other currencies that I hold, and I hope that they all do well. And the nice thing about cryptocurrency in general is that it bridges the world gap, right? Like we were in Malta. We probably had $200 in cash with us, $200 in cash, and it was literally worthless. We didn't want to have to go and find some bank or some like fiat exchange place and change it into a euro, and it was just hard. So literally everywhere we went, we were either using Apple Pay. It was really interesting, but Scott touched on the fact that I take all of my money, all of my
just look, the obvious thing for those first few years, just doing that was quite a fun for 6 months. But then after that, I really had to guard against becoming an asshole. And there were a couple of factors in my life which were really good. One was my parents, and the second one was my life partner, who were very, very good at keeping me pretty grounded and making me realize that I'm not as fantastic as the reflection in the mirror. So, having gone through that bit, I, it then just changed my perspective on where I wanted to go with stuff. And I know this is kind of veering away a little bit from, kind of what kind of portfolio you want. But I guess the idea of the talk tonight was, how do you handle this kind of stuff? And look, we don't need to just relate it just to you can see folk who, win hundreds of millions of dollars or overnight sometimes just because they happen to fill out 7 or 8 digits on a piece of paper or whatever. And the way they manage that and handle that. And it's just, this is always the whole aspect of human sort of nature. Mine has been quite long term, so it was a slow burn. But look, I'll just share with you personally my where I'm at now. And I have a number of people in my life whose company I really enjoy, and that gives me a heck of a buzz. There's no trust issues there. I'm really comfortable in their environment. They do not speak to me because of X amount of cash in the bank. It's just me, who I am, and that's something that you really need to guard against when you're talking about your exit strategy. Sorry to bring a bit of a downer from that, but that is all part of the process as well. It's that human experience. Look, my dad has got this saying now. He's in his mid-80s. He goes, "Look, the thing that matters to me most is the number of people who love me, rather than the amount of cash I've got." And you know what? As I'm going on that thing, that's pretty good sort of mindset as to where I'm getting to as well. So look, I appreciate, folks, this may not be a technical business answer, but it's just something, just keep at the back of your mind when you do sort of cash stuff in, and you're looking to, find it fulfilling, I guess, right?
Yeah. Cheers for that. And Ninja, what was your question regarding SafeMoon?
So, what was that one thing, Katsar asked? Would you like, both investors and newcomers to the space, when it comes to SafeMoon, what is the one thing you would want them to leave here with today?
So we've all spoken about the exit strategy, and Derek hit something quite hard. Is adaptation is hopefully going to be inevitable. There's still the unknowns to come, but it is the likes of going to the store and buying with your own currencies that you're invested in. So when we take a look at that aspect and we talk about the adaptation side of things, SafeMoon's doing something slightly different when it comes to the tokenomics side. Now, it is known that tokenomics, you hold, you earn. Now, SafeMoon's going one step further with their exchange and applying that to cryptonomics. So we've all started with SafeMoon. We can now look to use those reflections that we've earned by holding and putting that into the likes of XRP, Cardano, these top mainstream coins, which will then ultimately in some way hold their value a lot stronger than SafeMoon is right now, because we don't have that strong liquidity like Bitcoin. So it's about creating that diversity that we all speak about, where we're talking about that 7, 8, 9, 10 different coins, because it's not good to have all your eggs in one basket. But SafeMoon is creating those baskets that you ultimately may not ever get. I can't remember who said it, but it said you wanted to talk about having at least one Bitcoin. Some people may never get that, but through the likes of tokenomics, that ultimately will be able to help you get into Bitcoin, and then that Bitcoin will be then, while holding, creating their bigger baskets. So from a SafeMoon point of view, they're starting with tokenomics, they're moving to cryptonomics with their exchange, which then just helps you to grow your bag and grow your bag and grow your bag until your portfolio is diverse as you need it to be. And at that point, hopefully, you don't need to off-ramp, because again, then we are in an industry where it's adopted. and everyone's using it, and you can go buy those pair of shoes. I'm looking to run a rescue off the reflections of whatever bag it is. You know, I'm hoping that I can move some of my other stuff into the SafeMoon exchange. They grow, and that's more to the portfolio of running the rescue. And that's my vision and when I see it. So SafeMoon's step one. And then from there, it's about them bringing everything back into it. You could go further and further on with how SafeMoon are trying to bring other currencies together and other blockchains together and what they're trying to do with everything with their own blockchain and everything like that. But just take away the fact is that they're creating a system that you'll be able to grow your bag on any token that they choose. Now, there's a choosing. It's not just going to be applied automatically to every token. They will choose the tokens that they want to apply this to, but you hold, you gain. You've seen the reflections of SafeMoon. What's to say that you aren't going to see similar results for a Bitcoin? You know, there's less Bitcoin. So, as you know, we don't know the percentage of a Bitcoin, but if Bitcoin applies a 2%, 2% of a Bitcoin's a lot. And those reflections start adding up very quickly, and you start seeing big numbers very, very quickly. You know, so yeah, cryptonomics is step two, and then the diverse from there is obviously with everything else that SafeMoon is bringing. But that's where I'm trying to add into that conversation with exit and diversity and stuff. So
Cheers, Cats. Thanks very much. Does that answer your questions, Ninja? Is that all okay?
Absolutely. Thank you guys so much. I really appreciate it. You can drop me that, Randolph. But thank you so much, guys. Appreciate it.
No problems. Thanks for coming in. There's a lot of requests here. At the moment, we're just bringing up the people that do the spaces with questions that they've had from the community. So what I'll do at the end, once we've gone through it all, we'll bring up any individuals. We've got an order, but I know that Millionaire's pushed for time. That's why he's got his hand up. So Millionaire, how are you doing?
Hey everybody, I appreciate you having me up here. Yeah, I've got a couple minutes between client phone calls today, so I apologize if I'm quick here. I guess I'll direct this towards probably Scott. Scott, so as a angel investor as well as somebody that manages millions of dollars, questions that I get often asked: if the private individual ends up getting $1 million overnight, and that was their goal, they cash out, they have $1 million cash, okay, sitting in their wallet. Not everybody's like you and me that want to use cryptocurrency here in the future and push for that. There's a lot of people that get into crypto because they see the possible gains for that cash money and they want to cash out and put that in their bank. Something that a lot of people don't realize is that your savings account or your checking account in a bank is actually only federally insured up to $250,000. So if you have $1 million, $10 million, $100 million, what are your possible ways of managing that money across several platforms to where you can have $20 million into this, where it's going to be safe? You might have 5, 6, 7 accounts. You keep $1 million in each, so you can have that cash money, because not everybody's going to want to use crypto. A lot of people are brand new to this, and there's still a mass adoption that needs to take place. What would be your advice for those people that do want to hold on to that cash to use in their daily lives, to sit in a very, what they think is secure bank?
Yeah, I mean, I don't know if, I guess if you're really, really conservative and want to bet on the United States government and let them use your money how they see fit, you can go put your money in a bank, a savings account, a CD. They'll pay you nothing for it. The inflation coming from their printing of money will eat it, any of your gains. People that, let's say you had $10 million in the bank account the last several years, you actually only have 5 million now with what's happened in inflation. So I don't keep any of my money in the bank other than what I need. The only reason I have money in the bank is to pay bills. The second I can do that out of a stable coin or a crypto, it's going all in the crypto. So most of my money just sits in like Gemini, and I stake in stable coins that give you 8%. And yeah, that's risky, but I don't know. Gemini's a pretty big company. The Winklevoss twins, billions and billions of dollars of valuation, and like lots of technology and developers, and they're working with the Fed, all the governing groups out there, and they have a product that pays 8% if you just hold GUSD, their Gemini dollar that's pegged to the United States dollar, and they'll give you 8%. I would be throwing my money into those places. You could go do the simple Acorns, which just like gets into a Vanguard fund and usually spits out 8 to 10% a year over on average. And they're all there. You don't have to pay people to do that. Those, you can set those things up with very low management fees, if any at all. Vanguard, Fidelity, yeah. So I would get out of, if you're gonna have a bank account, get your crypto card set up to it, whatever your crypto card is that you use, get rewards and stuff. And so like try to get a lot of your transacting with a crypto card right now. There's so many of them, and then spread yourself around a few places. But I would, with what inflation's doing, you want to go buy some property, you want to go buy businesses, you want to have equity and assets. If it's not crypto, you want to have things that are going to go up with the United States government printing trillions of dollars that they should not be printing. And that is not going to be your salary. That is not going to be your hourly job. That is not going to be a bank. Those are all getting shit on right now. If that is how you make income, that's how you're growing wealth, if that's where you're parking your money, you're getting taken advantage of, because no employer is doubling what they're paying you, but they're definitely double you the price to get gas or to get yogurt or whatever it is at the store. So I just make sure you get yourself into assets and equities out there as fast as you can.
And that's basically exactly what I wanted to hear from you, because as you know, when I run my spaces, I have a lot of people asking me things like this, and they constantly ask me, like, what bank should I use to cash my crypto out in and keep it in if I get millions? And I try to explain that to people, but hearing it from a pillar of the community such as yourself, I think that maybe it hits home a little more. My father, he made millions of dollars off of working for a company for years. He ended up being the vice president of the company. And he knows what I do with crypto and how I feel about it. And I cannot get him to take his money out of the bank. He has, $3, $4, $5 million, whatever it is, just sitting there. And it's earning him absolutely zero. But he feels like it's safe because he can go take it out of the bank. But as you stated, with inflation, his money right now is worth half what it was 5 years ago. So I appreciate that. Thank you very much. I see other guys with their hands up. I apologize, guys. I do have to hop off as a speaker. I have a call coming in here any minute. But thank you very much for your answer. I agree 110% with you, Scott.
Awesome. Thank you.
Cheers, Millionaire. I know that Farmdy's got his hand up, and then Derek. How you doing, Farmdy?
Yeah, so I just wanted to add to that. That was a great point by Scott. And one of the things that I do, and this will kind of hit home. It's hard to relate. Everyone is on different paths, right? And so my investment strategy is not the same as Warren Buffett's, right? I mean, it's just you can't do the same thing. And I mean, mine's not the same as Scott's. It's just different, right? But one thing that I have figured out works really, really well for me is I don't buy liabilities. I buy an asset that will pay for that liability. It's got to be able to cash flow. And once I can get to that point where it cash flows to pay for that liability, then I can go purchase that liability. So that's a big lesson that I learned along the way that everyone can kind of keep in mind. And also think that a lot of the strategies that, outside of crypto, they're not mutually exclusive, right? So you can buy real estate and get depreciation that helps offset some of the gains from crypto and some other things. And there's lots of strategies to do that. And it's not just real estate. That's just where my background comes from as well. But the stock market, I've always tried to figure out how to, intertwine my strategies and to get the best out of this. So when you really sit down and look at what your strategy is going to be, try to figure out, how this bucket is going to affect this bucket and go from there, what's going to be best for you.
Okay, cheers. Derek, you had your hand up. Did you want to add to that as well?
Actually, no, we're good to move on.
Okay, no problems. Was there any other questions there? That was, I think Ninja's finished his stuff, isn't he? If we go to El Patron, you had a good question. I spoke to you earlier on. I told you to come up and ask it. So what have you got?
Yeah, so thank you, Randolph, for bringing me up. Cats, how you doing? Scott Paul, um, Derek, and Farm D. So, and this is just a question for whomever deem that could answer it. But a lot of our listeners that have invested in crypto, and it doesn't have to be SafeMoon, like you said, Randolph, right? But the majority of the one that I speak with are people who have invested in SafeMoon, and the majority of them, and us, because I can include myself in there, have not finished college, right? So we don't have the education to say once we become a millionaire, what do we do? How do we manage that money? And some people, and I put a perfect example. I don't know if some of you guys know a very famous boxer. His name is Felix Tito Trinidad from Puerto Rico. Very famous lightweight, middleweight, sorry, boxer back in the 90s that made millions and millions and millions of dollars. And his wealth was put to a bank in Puerto Rico with some financial investors, where actually all his wealth went to drain. It disappeared, and he ended up in court fighting, suing, the bank that actually was managing his money, because they totally lost all his money, and he was only able to gain back 5% of all the wealth that he gained throughout his career. And he's not the only one. So it could be multiple people. So a lot of people are afraid to say, well, where should I invest? Who should I contact to manage my investment? Should I go to Goldman Sachs? Should I go to the state financial advisor, the most famous one? Because people are afraid that if they do, and what happens if they kind of like, lose of the investment that you bring into the table. So I don't know what is your, yeah, and again, this is not financial advice, but your best strategy to tell these people what they should do once they know that they are extremely rich or have money that they have never seen before. What's the best way how to keep that wealth that would probably last them for life, and especially for their family members and themselves?
I think Scott already touched on it. I'll get my friend next to me to give his perspective, because I know that Scott mentioned it just now. If you've got a lot of money, it's doing nothing in the bank. So contacting somebody like Goldman Sachs or people like that you're getting charged a fortune for advice, and they're the ones that are going to be making the profit from you. I'll just pass you on to my friend, and he can tell you about a business side of things to talk about.
Yeah, I'll just sort of follow. We actually had something in the UK in the 1980s. There was a bank called BCCI, very sort of similar sort of scenario where, it looked really attractive. The interest rate they were offering at that time sounded too good to be true. And lo and behold, that old adage about when it sounds too good to be true came to fruition. And, collapse, and a lot of folk lost an awful amount of money on that. And just to sort of hone it, what do you do with this? Do you sort of focus on this sector, that sector? Obviously, Randolph has sort of specified that my interest is particularly real estate. And there was a real culpable reason for that. And that is, it's tangible. That emotional connection is there. You physically own that building. And, all those cliches come out. They're not building anymore, right? There's a finite amount of land and all that sort of thing. So there was always that emotional connection there. But look, hey, it can still, a deal can go wrong. But look, fundamentally, in this inflationary environment we're in at the minute, I agree, if you can put money into assets, allocate a certain amount of your wealth or income that's coming in. And my preference has always been for income producing assets. I know that's probably a term that probably gets bandied about a lot. I don't follow a lot of stuff that's out there in terms of, I've just stuck to my own sort of golden rules on this. And, just the process of doing that year after year, you just develop something which I call an investor's eye. And just intrinsically, it feels good. I have to say, whenever I've been in an auction room, I've the minute the gavel's gone down and the auctioneer looks at me and he goes, your property, sir. I've always felt that I've overpaid. And 2 or 3 years later, I've always thought I wish I'd bought more. But that's the benefit of hindsight. But it is just developing that nose and that view about where you want to go. And just you get, my kids always ask me, Dad, what do you see in that a lot of folk in the room just missed? And it's just that gut experience you get. A lot of my partners always used to say, we'd have really long discussions about when we were doing investments, and they always used to look at me in the end and say, look, what does your gut say? And I'm afraid it's just that old slog that you have to do. You're gonna lose a few here or there, but generally, as long as you win more than you lose, the obvious stuff, you'll develop that nose and get that strategy and enjoy it. Because when you're just enjoying it, you don't think of it in that way, and you just subconsciously just get smarter at it. It's fun.
I think that's the thing, El Patron, is that there won't be a learning, like what my friends just said, but there won't be a learning process. You won't be able to get that gut instinct. You're going to be thrust upon X amount of money in a quick period of time, so you won't get that learning process. So it's in my eyes, and I think Scott hit the nail on the head as well. You've got to diversify, so you can look at your portfolio in real estate. You can look at in crypto. Obviously, there's a big shift now because you're going to be getting reflections. So then you're going to need to look at the difference between what your reflections are going to be over 12 months. So rather than drawing them out and buying something, then you'll be looking at taking a loan out and offsetting it against your crypto. There's so many different ways, but there's that many sectors. You're not going to be struggling for opportunities.
Can I just go on? There is one which I haven't divulged up until now, and that is I always leveraged on my investments. Now I know some people have a different, all sorts of views on that, but for me that worked, and that just always obviously multiply the results. Look, I'll share with you on this that sometimes I, borrowed 100% on it, and the property taxes, as you'd say in the US, on this stuff as well, and just developed a bit of a track record with a cohort of banks who are prepared to back me. Now I think the environment is slightly different at the minute, and those days perhaps were slightly halcyon days, but it can still be done. It can, you've just got to bring that professionalism to the table. And people will back you. Look, as equally as Scott said, money in the bank is, I've got so many members of my family who just do that. They're salaried and they put money in the bank and are busy losing money, working hard to lose money, as I say. And we have this open conversation, and I say, you know what, they're lending it to me. So you want to cut out the middle. But I'm just saying, it's not everybody's cup of tea, but I find if you get a system, it works.
Famdi, you wanted to add to that?
Yeah, I do. I think that's a great segue because, I've in the past I've lost, a couple times pretty big, and one of those losses in the stock market early on after I was out of pharmacy school was, to the tune of $300,000, and it wasn't my entire net worth. I was able to recover, but that's from a financial standpoint. But what I caution everyone to do is that and I'll mention this too, Safe Moon Millionaire said something earlier in a space that said, if you haven't lost, you're going to. And so you need to be very cognizant of that. Okay, so that's going to happen. What you have to do is try to mitigate how much of a loss that's going to be. And not just financially. This is very, very important. And actually even more important than the money piece is from a mindset standpoint. So when I lost $300,000 in the stock market, I went into a depression for over 2 years. And it essentially went down the track of, planting the seeds for costing me my marriage. Because I just felt like I was a failure. I had never failed, not truly failed, right? And a lot of us, when you get to this point, or if you get this money really quickly, you're going to be on cloud nine. You're going to think, you're the shit. Like you can do no wrong, and that's wrong. You could lose it all. Okay. And so from a standpoint of just keeping score, I think it's super important that you learn to deal with failure You learn to move on. The only reason I'm a success at this point is that I didn't stop. I stayed in the game. Now I changed my strategy and I found real estate and then further on then crypto and some, but this is over a 12 to 15 year time frame, right? And so I've just learned, and I'm stronger than I've ever been mindset wise, but that's what has made me a success. Not that I've made X amount of dollars. And so that is something I truly want everyone in this room to really get, is that it may not be the end all to lose the money, but you've also got to deal with the mindset and the loss, right? So fail often, but fail as soon as you can and mitigate those damages. You don't want to be over leveraged in certain cases where you do lose it all.
Yeah, I think that's a great point. Yeah, there's that many people in these spaces who, even if they've put a few $100s in, they think they're going to be a millionaire in the next 3 months. And when you look at the timeline of even something like Doge, you're talking 5 to 6 years to get from 301 to the height of 73 cents. I know there's big utility come in and there's other things with SafeMoon, but you've got to keep your head screwed on. And you make a good point. Is that okay for you, El Patron?
Yes, and I'll step down and I'll leave it with this. My mother always used to tell me it's easy to get to the top, but extremely hard to stay on top. And she had the same issues when she became wealthy at one point of her lifetime, and the people that made her that wealth told her, you will have family members that you have not seen before, cousins, friends, and they're going to come at you from every single angle. And the only reason why they're coming to you because they know that you have a wealth. So people have to be careful, be smart about it, because if not, it's really easy to get the money, but it's really, really, really easier to lose it all.
No, you're right. You make a good point, Patron. Thanks for coming up. RJ Adonis, the YouTube sensation. How are you?
What's up, Randolph? How are you, man?
I'm good. Yourself?
Doing well, thank you. I'm going to see if I can ask this really quickly here. This is to pretty much anyone out here. So, like Scott Paul has said, right, money in the banks is completely pointless. I 100% agree. Unfortunately, there's people that are in the community, amongst the 3 million holders right now, that simply just want to cash out, right? Like Derek said, hopefully sometime in the future, cryptocurrency is the currency, and that is the absolute goal. But until that mass adoption takes place, people will simply just want to cash out, right? So when SafeMoon explodes, and again, not financial advice, and people start taking profits at their target goals, we've heard a little bit from the ladies' night. They had Crypto King in there, but he was in the blockchain for me for the majority of the time, so I couldn't hear what he was saying. But when SafeMoon helps others achieve financial freedom and they want to buy their homes in cash, be mortgage-free, etc., what is the best practice to transfer that money to a bank or take necessary and proactive steps now to where the banks won't hold our money for like days? Sometimes we've heard weeks, right? So again, how do we sell the tokens, transfer to the exchange, and then we're about to transfer to our bank? What is the best way to make that transition as seamless and headache-free as possible without the bank freezing and holding our funds?
So we've probably got Scott and Derek because they deal in they live with cryptocurrency. So if one of you two want to answer that, Derek or Scott.
Yeah.
Derek, give it a real fast go, and then I'll.
Yeah. Could we consolidate the question again one more time, just so that I know exactly what I'm answering?
Yeah, no problem. So let's say down the future, let's just work with unimaginary like whole numbers. Let's say someone wants to cash out 5 million in SafeMoon. How do they transfer that or be proactive right now to a bank to where they don't like shit themselves and they freeze your account because they think you're money laundering? What steps can people take now or possibly in the future so when they transfer that money, the bank isn't holding or freezing those funds for an extended amount of time?
So I think it's important to have a personal banker, someone that you get to know really well in your hometown, where you can have that kind of conversation with them. This might be a financial advisor, even someone that understands your finances, knows your assets, understands the policies that go behind this potential newfound wealth. I think my financial advisor, if I went from, let's say $50,000 to 5 million, it would be unexplainable to him of how that happened if I haven't previously had a conversation with him of what's going on. So, I think that's pretty much my answer to that question. I think it's a good idea to have a conversation, open conversation, and understand the laws and rules surrounding moving that much money at once.
It is a very so I've done this. I have off ramped. Let's just say I on ramped a $50,000, and I've off ramped much more than that, because I've been in Bitcoin since it was $200. That's when I bought it, and they it's just like anything. Coinbase knows me. The IRS sent me letters. The bank knows this money came in. I reported it. There's forms you fill out. The cool thing is, it can be done, meaning you can take these tokens, these magic internet monies, and you can turn them into US dollars that sit in a bank account. It's not as good as it should be. Off ramping is not where it should be. People are being forced to hold because there's actually not a great off ramping strategy for a lot of these products. And so a lot of the market could actually be a reflection of that, as people just don't know how to get out if they get spooked. I kind of like that part about crypto, but once it's really easy to on and off ramp, you're gonna see a lot of people that they just go in and they take it out, just like you do on Robinhood. It's like, or Venmo. It's just like, send to my bank account, and it goes into your bank account. And it's like a day. It's free if it takes 3 days. If you want to express it, it's 1 day. We'll see that same thing, and that's how BlockFi kind of works, and Gemini and Coinbase, and the big off ramps right now. And I would say that it's just doable right now. It's not a hard thing to do, but make sure you know your off ramp, because right now SafeMoon, if I'm not mistaken, you can't off ramp. Can anyone clarify? In the app,
Not that I know of.
Take money. Yeah. So you've got a very interesting thing, an app that allows you to put money in through MoonPay and Wire right there, but it does not allow you to extract the monies out and put it back into a bank account. That's kind of weird. I'm just going to say that's weird. And that it's not on purpose. I don't think it's on purpose. It's that there are not as many companies off ramping money as there are on ramping money. There's tons of these MoonPay, BitPay, Wire. There's 4 or 5 of them. I'm working with them right now for a new app we have coming out. But people aren't asking the question that's like should be is, what happens when I need to emergency pay for medical treatment and I need that money? How do I off ramp it? The doctor doesn't want my SafeMoon. In 5 years, he'll die for the SafeMoon. He'll be so pissed he didn't take it for the procedure. But right now, that 60-year-old doctor does not want my SafeMoon. I need to turn it into US dollars. And there's not a lot of exits in the crypto freeway as there should be. It's like lots of on ramps, but we're driving down like, man, I missed my exit. Where's the next one? It's like 700 miles away. Like that's what it feels like right now on the crypto highway. Is that on ramps are there, but there are not a lot of off ramps, and it's a problem. It's going to get fixed, but right now that is a problem.
Yeah, you're right, Scott. It's I think unless you're experienced and know how to, send your SafeMoon back to a stable coin and then transfer it across to fiat, which a lot of because it isn't a simple process of I've done it this way, so if I do it the other way around, I'm going to get my cash back. It's not that simple. But hopefully soon, I think I'll bring Katz in on this, where there'll be a SafeMoon card, and you'll be able to transfer things back and forth. How far away, Katz, do you think it'll be before it'll be easy to exchange your SafeMoon back to fiat without jumping through hoops?
The SafeMoon exchange will be the first biggest point to that. team of obviously working on the regulation side of things for quite a while, and it's the regulations that is currently restricting them on the exchange side of things, and that's what they're waiting for. But it's easy enough to, how would I say, once you're through the door, it's a lot easier to make changes and get approval because you've already been approved. But it's getting the first initial approval from those people that ultimately will control the way that people buy and sell into the centralized, decentralized space. So when you're coming back to that centralized space, that's when they get the control. We've talked about how control and everything is a big part of what crypto needs. And if it's done in the right way, which I have no question in my mind that SafeMoon's doing it in the right way, is that they're going to make it that easy that, yeah, you'll be able to do two things. Completely sell to fiat if you really need to. If not, use the SafeMoon card. When that comes, I couldn't tell you. But it's not far off. At the end of the day, the project's 9-10 months old. And you got the wallet. And from what John and the team have already said is that we're nearly there. It's just a few more stepping stones that we've got to jump, and then we're there, and then people will be like, oh, okay, I was moaning because of what? An extra week of delay? 2 weeks of delay for the wallet, for example? So, yeah, not long at all. But the exchange will be the big part to that.
Okay, Derek, you wanted to add to that, and then FarmD?
Yeah, I'll try to be like sort of quick on this. I do have one really big frustration with the space, and it's the idea that people want utility on one currency, one crypto. Bitcoin, guys, has been around for 12 years, so this shouldn't be hard, but it is. It's very hard. There was a point where Scott was paying me and my money was literally locked up for 3 weeks because Binance, the portal through Binance.com shut down. So I had to rework a whole new system of off-ramping money. I think what we should be doing as a community, like obviously utility on SafeMoon, bringing the exchange, having a card, like that's nice. But it's not acceptable until it's as easy as going to El Salvador and using it as currency, where I'm not going to get taxed 40% on every exchange of money that I do, where it's legitimate currency and it holds real monetary value to our economy. And so I think we should be pushing as a group of people more so than not for this to become currency. And then you won't need a bank. You won't need any of this other stuff. I just don't think it's acceptable until we get to that point, which is probably years away. So utility's great, but yeah, I don't know. That's still one of my biggest frustrations. I've been on the phone with executives at BitPay and some of these other companies. Scott and I have met with some of these people, and no one has a great solution. I mean, I'm not super satisfied with my Coinbase card. I'm not super satisfied with waiting on banks for my money to land. It's still, there's a lot of friction. And I think as we get closer to Web3 and implementing that into society, that's the only point at which the friction will start to go away.
I agree. It's going to be a long process, but I can see there's already change in. I've been listening to some U.S. senators, and the excuse of it's bad. Blockchain it's not a good thing because of money laundering, because of this, because of that. But now there's a lot more coming on the opposite side, and they can see the advantages of blockchain. They can see the transparency of everything being on the blockchain, and it can't be changed. So the change is coming, but it's everything takes time. As you said, Bitcoin's been going since 2009. And back then it was 5, 6, 7 cents, and now it's at $55,000. But yeah, good things come to those who wait. FarmD.
Hey, really quick, I got to step off for just a minute. I'll be right back though.
Yeah, no worries. Farm, do you want to add to that?
Yeah, that's some great input from these guys. And one of the things I think about in this aspect is some of these things are here and we're just not utilizing them yet. It just you may have to pan out to like the 50,000 foot view, right? And so some options, and so I'm really big about whether it's a 1031 exchange with real estate, whether it's whatever this is. I'm always trying to find a way around capital events, and so you could borrow against it. I mean, that's certainly an option. And so you're going to find more and more options as we go forward. But there are options out there where, like whether it's Bitcoin, Ethereum, and there's more and more and more every day. But I mean, like I literally took out a loan against my Bitcoin and my Ethereum on Celsius, and just using them as an example because that's what I've done. And it took me 10 minutes. It was 1%. It's a interest only loan, and it was for 3 years, and it's 25% loan to value. I mean, that gives you plenty of leeway for that price to come down, go up. You can actually do, if you're really smart about it, there's some cases where you can build in and gain on the arbitrage there as well, right? So there's a whole nother piece to that. But when we had some of these dips, I don't want to have the capital event with my Ethereum. I was 10 days away from it being long-term capital gains, and I wasn't going to sell it, and it was a substantial amount. So I just said, you know what, it's already in Celsius. I'm earning interest there. I'm going to try this out and borrow against it. And you're going to see more and more of those. It's super easy. You really don't have this middleman. And, there's a lot of options even in DeFi where it's 0% interest and they're actually farming to pay off what would have been some interest. But I think that's got a little ways to go. But there are some options out there. You just have to continue to educate and look at these things. And there's ways to do it, guys.
Go on, Scott.
I'm a well over a year of a BlockFi user, so this is a centralized way to leverage some of your main tokens, Litecoin, Bitcoin, and Ethereum. And for a while I was earning interest, and then I decided I wanted some cash to go do something with in the real world. Actually, it was investing in this Volley app that I use. So I staked quite a bit of Ethereum, more than I probably. It was only about $1,700 at the time, and I got this loan, and it's centralized, so it's not like Celsius or some of these others that are, or Compound, that are actually allowing these really low interests. I think it's like 9%, but it works. And I can tell you, in the real world, I've done 3 loans. Big amounts that are functioning. Like, I've gone through the full process. I've got the USD to my Wells Fargo account, used it, and then I paid back the crypto loan and leveraged these tools so that I have to sell the Ethereum and incur a capital gains attack. So these things we have, SafeMoon, Ethereum, Bitcoin, there are things both in the centralized world and the DeFi space that allow you to leverage them, to not have to sell them, and to get utility out of them. And that's just awesome. That's the promise of DeFi, and the promise of a lot of these things, that we can start to do things with them that weren't. I didn't even know what DeFi was a year ago. I didn't learn about it until February, when I was starting to get into PancakeSwap. So I just think that we're at the very beginning of figuring out how money can really work, and we're just learning what the banks have been doing all along, and we're finally having options to be custodians of our own money with private wallets and keys. And now the banks, we don't have to use BlockFi even. I don't have to use them. They're right now custodying my money, and so is Coinbase. But with DeFi, it's gone. I am now the custodian of my money, and I pick the projects, and I do what sovereign countries do, but I do it on my own, and I go use my money that I own, that no one can take from me. And I think this is what just has never happened before. This is the first time this has happened, and it's gonna be great. There's so many naysayers out there, and there's so many people that don't understand it, but it's happening. I've seen it. I've been in it almost a year, and I've watched things happen, and they're real world applications that used to be what banks provided, and now it's no longer banks. I'm doing much better work with much better rates outside of that $1 trillion system that we used to rely on so much. And I have to say, I can do maybe one more question, and I have to run, take my wife to lunch, and I'm like 2.5 hours overdue for meeting.
Yeah, no worries, no worries. Appreciate you coming on, Scott. Is that okay, RJ?
Yeah, no, that was an awesome answer. Thank you so much. And I'm glad PharmaD actually touched on Celsius, because I've been using them. And I told everyone that I'm going to be transferring a large amount of my portfolio into Celsius. And I'm going to show everyone how I'm going to utilize the 1% loan, because that's how the 1%ers do, right? So I'm super excited that someone else said that, though. Thank you so much for the answer. I'll drop down.
No worries. Thanks, RJ. Jeremiah, my friend, how are you? I know you've been dropping in and out for the last half an hour. Your connection isn't very good. How are you doing?
I'm doing well. Thank you for asking. Thank you. For those who don't know me, I'm Jeremiah, the host of the Safe Moon Water Cooler in the morning. Thank you for having me up here. I really appreciate the opportunity. My question, since you have one question, last year is kind of like two, but it's really small. And this goes for Scott, and I have some questions actually for the other panelists. My question is, we have been seeing beefy finance on Twitter lately, and in the news, I guess, Twitter news, right? What does SafeMoon, what is the connection between beefy finance, and if there is a connection, what will it benefit SafeMoon to be, and I guess in partnership with beefy finance? What is beefy finance going to do for SafeMoon?
I actually can't speak to that, not because I'm like not able to. It's actually not. I'm not versed enough in what's happening there. Although I know a close friend of mine is one of the beefy finance DAOs. What do you want to call it? Major holders, believers, and he and John had a lot of great conversations in New York, and John sees the value of what beefy can do for with a partnership, and so I know stuff's happening, or at least like, but I just don't know more than that. I myself am very bullish on what beefy is. That's actually where the majority of my DeFi is located. And another one I'm going to is actually a competitor of beefy, or not a competitor, sorry, a competitor of Celsius, but it's called the Qi DAO. QI DAO, DAO. So there are things happening, and I guess I'm really into DAOs. I like the beefy DAO, I like the Qi DAO. I like the principles that underline the white papers for these, because they are trying to become the Wells Fargo of DeFi, and the arithmetic and the math is so perfect on these things that they have completely eliminated any middleman, anything, and then finance is like getting to the point where it's just reflects the exact risk and that is really there. Like there's no real estate people or HR or defaults to have to like charge a bunch of extra interest for. There is nothing to fund other than this smart contract that is stated, and it's like I just think it's really incredible how these things are popping up and allowing us to borrow at 1%, and in some ways make money, because you start yielding in the Celsius token and stuff, and or paying back in there, and that could go up, or compound could go up. And so it doesn't make a ton of sense to me. I don't understand all the workings of beefy, and I don't understand all the workings of the Qi DAO. I'm actually a really dumb person when it comes to things. I can't get complex ideas very well. I learn, this is what I've told people, I learn by going out and doing, by literally trying the products, giving out Bitcoin peer to peer, seeing how it works, and it's from those experiences and from talking to people. I don't watch Twitter or YouTube videos of anybody. I talk to people in person and hear it right from their face with their eyes looking at me. That is how I learn. And it's been extremely beneficial for me, because I that's how I can't get into the technicalities. I try to just learn right in front of with people, and I try to learn by experiencing the actual thing that we're trying to do, whether it's get a loan in the DeFi, whether it's stake, whether it's create liquidity pairs and put them into PancakeSwap and BNB and make those type of things. I have to go do it. I have to see it happen. I have to see the transfer happen. And when you do that, when everybody goes and do that, that is better than any education you can get. We luckily can go and test all this with small amounts of money, especially in BNB where the swaps are so inexpensive. You can go test all these things and watch the math work right in front of your face. And that is unreal that you can go and open your bank today in the metaverse, in MetaMask, wherever you want to do it. You can go open yourself like custodian bank and go put small amounts of money to work and watch the math work out. I love it. It doesn't matter if you have 1 million or $100, especially in Binance and Solana. The gas is so low that you can go and get your kids dirty, get their hands dirty. Instead of going out and like raking leaves, go out with your kids and go swap some tokens and show them how it works. And so that I know this is long-winded, but this is me just kind of ranting of the miracle of DeFi and what we're about to do. And I can't get off, but I have to disclaim that I'm not that smart of a person. I can't sit and do technical analysis of how automatic market makers and stuff work and how all these protocols. A lot of it's gibberish to me still, and yet you guys have me up here talking to the panel. But that's because I'm a simple-minded person that I try to look for, I try to learn by experience and doing things, and I don't have the deep technical knowledge of everything to understand what it's capable of doing.
And that's fine, Scott. I think that's something that me and you have in common, right? It's like, we might not have the whole technical knowledge and can break it all down and talk smart, but we know how to make money. And if it makes sense and it make money, I'm cool with that, So that's just what it is. My other question is, you made a post the other day and you had Santa Claus flying through the sky. And I wanted to know, what exactly were you trying to say? And can you explain that to our audience?
100%. I've been waiting to explain this. It's so awesome. And this is going to be a great lesson to everyone here. So listen carefully. I have a fan on LinkedIn who watches all my posts and he makes memes and then he sends them to me. And I have no idea where he gets these ideas. Craig Rose is his name. I've never met him in real life. He's lived somewhere in Florida or back east. I love him to death. He's a good friend digitally. He makes memes. He sends them to me. And so I have something to say, and I always like to add a photo to something sometimes. I like to put media into my text. So for everyone that read into that image and looked at the reflections and the Tesla logo and the skyline and the dogs, like, you guys were making stuff up that I didn't even see. I didn't know there was a Tesla logo. I don't even know. And so this is the great lesson here, is that we want to assume so much more. We want to see, we want clues, we want to read into things. But most of what's going on Twitter is just memes, guys. There's just funny stuff. There's nothing to read into. There's no conspiracy theory. There's no, Da Vinci Code going on. There really isn't. And I even talked to John about these things. I'm like, John, I can't believe the level of detail these people are going into on all these posts I make and the videos that Derek and I made. And he's like, oh, just get used to it. It's just how it is. I'm like, I'm starting to believe the very things that people are coming up with. I'm like, did I actually? Wow, was that there because it was supposed to be? And I manifested a Tesla logo somehow that Craig knew I wanted to tell the world that there's a safe moon landing thing instead of a rocket, a T. No, it's just fun, and we have to kind of chill out a little bit and not look for signs and everything. I do believe in manifestations, and I do believe we're all being led to be a community and talk to each other and learn from each other and be a support and to win together, and that we all want each other's best interests. I just don't believe there's evil people out there. There are some, right? But I don't see them often. Just finished Ted Lasso, watching 2 seasons of it. And it's an incredible show to me that has taught me a lot about how teams are built and how we can believe together. And so if you guys haven't binge watched that, do it. I see a lot of the same stuff in these SafeMoon armies and these people talking, but there's a lot of wasted time trying to see things that just aren't really there. And that meme, that Santa Claus photo of me, was nothing. It was 2 seconds of thought that I went into my photo library and posted it with a little phrase, and that just sums up most of what I post. So don't read too much into this stuff and anything, guys. Let's go on. Let's get balanced portfolios. Let's fight the system. Let's get rid of banks, and let's go build a future together. But let's not sit and look at every conspiracy theory that might be out there, because it's most likely just a conspiracy theory and not founded.
That's hilarious, because it even went as far as, the picture was Chicago, and entanglement was around Chicago, and it went to the next level. And it's so funny that it's a friend of yours that just sent you a picture, you posted it, and the next thing it's what's going to happen in the Gambia in 3 years' time. Brilliant.
I mean, maybe my friend knew exactly what he's doing. He's part of the Illuminati. I don't know, but
Time traveler.
I believe it was accident.
Brilliant.
He's a time traveler.
There you go.
No, that's great. And anything else, Jeremiah? Anything else?
Yeah. Just real quick, and this goes to all of your panelists, right? So when we get this newfound wealth, what are we to do? Like, matter of fact, when you guys got your newfound wealth, what did you guys do with your family and your friends that came around? Or did you actually set a piece of it aside for them? Because you're going to have those type of people that will come around and they feel like they're entitled to your money. Because I have family and friends that I've told about SafeMoon. I told about crypto in general, period. I don't care what you buy, just buy something. And they say, no. They'd rather me take all the risk, basically, and say, hey, if you ever get rich, I'll take $100,000. Or why can't you just take care of the family? And I feel bad because I'm just like, I told you about this and you chose not to take action. So what did you guys do? And if you did help them, did you set money aside for them because you don't want to go broke? If you can answer that question, I really definitely appreciate it.
Yes, Scott, if you want to answer that one, because I know you've got to shoot off, and then
Yeah. Listen, I made money. I'm not going to sit here and tell you guys that I don't have a lot of liquid cash, but I have a lot of money in equities, and I've tried to observe what people around me how they've changed and what that changes in my life, because I'm very much a social person who had a lot of friendships before, and I've had a lot of new ones after. And I'm ADHD, so I've got like 5 voices in my head at any time trying to analyze everything going on in my life. And one of those things is, how are people reacting to me? How do they view me? What are they trying to get out of me? And I can just attest that most of the human races are decent, and they are pretty. They don't have those questions where they would expect me to give them something that they didn't earn, or they actually didn't even listen to me when I told them. And I can tell you the opposite. Actually, I can tell you how decent most humans are. The person who got me into Bitcoin at 2015, I've gone on to do incredible things with it, and it would not have happened. Like everything I've done probably wouldn't have happened if it wasn't for me listening to him late nights in Los Angeles where we both lived. He's never asked for anything. He's never tried to claim it as his glory or anything. He continues to give to, and so most of the people I see in the space are just becoming increasingly charitable and don't expect anything from people. I don't know if that's everyone. I just been lucky to be around really decent people, and even the people on Twitter that write to me and ask me questions, I just don't see takers. I see more and more of an abundance mentality across everyone in humanity. And I don't know if this is me manifesting just the best people around, but I have a hard time finding people who are not striving to have an abundance mentality, who don't want to give back, who don't want to save their people or be charitable when they have wealth. And so as I look for bad people or bad actors with my ADHD, as I analyze everyone in my life, there's just zero. I really can't find them. And I'm talking thousands and thousands of people. And I might be naive, and I might be the fool, But you know what? I'm living really good, and I'm living a good, foolish life. And I feel that if people have taken advantage of me and I've invested them and or whatever it is, and they've lost my money, I was okay doing it. I made that decision. And if I've had to give handouts to people, like, I made that decision. No one forced my hand. So I choose to live a life assuming that everyone around me is has the same abundance mentality, and not seeing the world as a finite resource where it's a zero-sum game where we have to literally take from each other because there's a limited amount of wealth and resources in the world. And I would encourage everyone here to start thinking about that, and start thinking about, like, we can make the entire world rich together to the point where there is no poverty and there's no hunger, and healthcare is solved, and we can take the homeless and find them whatever their needs be. It could be mental health that they need help with. We could find ways to help that, and we could end homelessness. I believe all that is possible with blockchain, with the things that we're developing right now. And I would encourage everyone here to start to develop an abundance mentality, and it will create wealth for you. It is not a finite resource. We all can achieve it, and we can all. And in a world where we're all wealthy together is a world I want to be in. And that's my final words.
Just to add to that, Scott, do you think that's down to you gradually accumulating wealth, or over like a longer period of time? Do you think it would be different if all of a sudden you've gone from, just being a sales manager to having $10 million in your bank? Do you think it would be different then?
I have to let you guys know that it was a long time for me. I failed at many businesses, and finally one hit. Some people who have wealth happen without the effort, i.e. maybe the lottery or something, might not be prepared for that, and might have a friends and family who feel like that was earned unjustly, or it was luck, and they will, maybe be vultures in that situation. So I can't speak for other people's experiences with coming into newfound wealth, but for me, I earned it. Did I have some advantages in where I was born and family I was born into? Yes, and I can't deny that I had probably some advantages. And did I seek education? Yeah, I probably had some levels up, but I earned it. I took risks. I failed many of times. I've lost a lot of money. I've wasted a lot of time. I didn't see my kids like in their early years because I was so busy trying to make hardware for the iPad that I don't remember my daughter going to kindergarten because I was so busy. Like I sacrificed, and I'm not saying no one else here has sacrificed like that, but I do believe that when you grind and then you make wealth, that people respect that, and they shouldn't say, oh, that's just luck, because I grinded. And I think everyone here that I've met is grinding at their passion, and if SafeMoon is their way to wealth, I hope that everyone here deserves it. And it might not be directly related to the fact that they're grinding at a factory making money, but they learned, they were out there and curious enough to get into cryptocurrency and put some in there early enough and believe and hold that I believe they will make that money that way. It might not be directly from the efforts of their day labor, but I hope that they make money, and I hope that they know how to share it and share the wealth and teach other people abundance mentality. So I don't know if that answered your question, but I've got to run. I like everyone here. I love everyone here. I hope that you guys ask me questions directly. I hope that we can all see each other in Vegas and Salt Lake sometime. I'm a pretty easy guy to get along with, and I want for everyone to be in a friggin' happy life in a world where we're not afraid of stuff.
No, we appreciate you coming on, Scott. Spending 2 hours of your time. Appreciate it, and thanks for coming on. Thanks for your insight into the business and being around the guys in SafeMoon, and hopefully we'll. I know you're in a lot of spaces, so we'll probably see you in the next couple of days. And thanks again for coming on.
Thank you, everybody. Have a great weekend.
No problem. Jeremiah, do you have anything else? Anything for Cats or?
Well, yeah. I guess that. Well, I wanted to have that conversation kind of extend out to them as well about their families, because I know everyone had like a few different experiences. However, if you don't mind me asking, I know someone did mention about living off of a loan, and one thing I wanted to say about that, and kind of ask a question to them, whether they lived off a loan or they invested their money in real estate, so they kind of, was able to maybe do something with that. But one thing, a comment I wanted to actually give is that with the whole, like, to me, Tether has always been like a bank, right? Put your money in there and everything else like that. And I heard you guys talk about the card. Why haven't Tether ever came out like with a card that we can literally put our money there and just take it right out? I mean, what a missed opportunity for that to actually happen. Like a credit debit card or something like that. So I wasn't sure why that hasn't happened yet, but that was just a thought of mine when you guys were talking about like how to pull your money out and everything else. So, is there any way that they can probably talk a little bit more about maybe the loan situation, or I don't know if they extended their knowledge on that already?
I think
Taking a
I think
person.
the main thing on the loan is you're basically leveraging it against your asset, which is your cryptocurrency. I know that Scott said it and Derek said it as well regarding Bitcoin, for example. But the newbies, the new kids on the block. So, for example, SafeMoon, because it's got tokenomics. If you're leveraging against that, so whatever, $100,000 against your $100,000 of SafeMoon, rather than taking out your SafeMoon and paying for your $100,000 car, if you're taking the loan out, you're paying that loan back. But because you're gaining so many reflections over that 5 years, in theory, depending on the price, you're going to be paying for that loan with your SafeMoon on reflections, and you've still got your asset. Rather than getting rid of your assets, you've got no SafeMoon left. You're going to be paying it with your reflections. You're not really doing that with Bitcoin. You're kind of leveraging against the price going up. That doesn't necessarily work with SafeMoon because you're going to be getting extra coming through on a monthly basis. So in effect, you're getting an income from SafeMoon and you're paying for your loan with that, which would cover the loan and the interest.
Absolutely, that's a beautiful situation. I think that's it, man. Thank you so much, Katz. Thank you for everything that you do. Congratulations on your promotion. And also, Randolph, thank you for your friend for showing up for all of us. Definitely would love to hear more from him and his experience since he's been in the game for a long time. You have an awesome panel. Thank you to everyone who contribute. You have a literally all-star, man. You're a stand-up guy. I appreciate you.
No problem. Thanks for coming on, Jeremiah. Bigfoot's next, then Holly, then SafeMoon Ryan. Bigfoot, how you doing?
Hello, I'm doing fantastic. Thank you all so much for this wonderful space today. I've learned a lot and really appreciate it. So I have a more personal question, and I would love to hear from anyone that's willing to answer, because I do believe that any answers that are given could highlight some pitfalls for people who are new or just starting their journey to wealth. So everyone that you had on the panel today had a certain level of success and has reached a certain level of wealth, whether from crypto or more traditional investments, whatever it may be. So hindsight is always 20/20. And looking back at their wealth building journey, I guess I wanted to know what would they do differently, knowing what they know now. If they could go back, what would they do differently? And this doesn't necessarily have to be a financial question. It certainly can be. But perhaps it's revolves around a physical health or mental health or relationships or time management or whatever it was, just everything along that journey to get them to the wealth level they are today. What would they go back and do differently if they had the choice?
I'll pass this on to Katz if you want to go first on this one.
Yeah, no, that's an easy one. For me, it's trusting my gut. Trust your belief in what you're actually doing. And I'm not talking about the beliefs of crypto or the system itself, but just with taking profits, moving and knowing when the market's going to change. An example over the last, say, 48 hours to 72 hours is the $1 trillion wallet, the 20 trillion wallet. There was a great opportunity for people to kind of follow the trend of the whale to then get in at what we've seen today. So knowing stuff that, like that, and using the knowledge of what people are doing within your specific crypto could then give you an inkling to then make additional profits. That I've held my bag, haven't touched it since, but it's just knowing what I know now is that I should have trusted my gut and I would have made a lot more money. And it's believing in yourself that what you're thinking and what your heart believes in is actually true. Don't get me wrong, there are some times where your gut might be wrong, but if I was to play out both sides of what's the percentage, about 85% of my gut was right versus that 15%. And that's based off what I know now. So I could have made a lot more if I was to trust my gut. So believe in what you're doing, believe the research that you're researching, and just take the time and don't rush something just because the market's changing too. But yeah, go for my gut all the way. And I'm definitely following that more often now.
Mine's an easy one. It would have been, if I knew back then what I knew now, I would have, instead of spending $4 grand on a miner, I would have spent it on Bitcoin, and I probably have £1.5 million in the bank. So that's a pretty easy one. The Fondy.
Yeah, that's actually a really good question, because I wouldn't have beat myself up for so long, right? That's a biggie. I would have, if I could have learned to adjust the frame that my mindset was in, right? So if I could actually, and that's something that a lot of us don't realize we can do. Your mindset is really based on beliefs, and your belief structure can change. It's all based on perception, but you have one perception, and if you look at history, you're looking at that and saying, okay, well, it was this way, but that may not necessarily be the case. Like, okay, I made a really stupid mistake and I stayed in it too long. Well, but is that necessarily true? If I could change my perception on it now, could I change history? And in some ways you can. So you can kind of alter that into a more positive frame of mind. And I think learning how to do that sooner rather than later has been the absolute key for my success. And I really wish I could have learned that younger, after that, that major loss, and just being able to move on, drop the bricks, right? I mean, because you really need to look at a loss as a learning experience. I know this gets thrown out there a lot, and it's harder to do it in practice for a lot of people if you keep saying it's hard to do. If you tell yourself it's an easy thing to do, then you can do it. And so learning from that quickly, moving on, and using those gems that you learn in the future and not straying away from that is just something I wish I could have done earlier.
Is that okay, Bigfoot? Anything else on the before I drop you down?
No, that was brilliant. Thank you all so much.
No problem. Thanks for coming up. Holly's next.
Hey, thanks everybody. I got to tell you, this has been fantastic, and you're preaching my tune. You've basically, so many people have said so many great things. I'm going to keep this short because I don't know how much better I can say it, but I will tell you that I agree with the last person wholeheartedly. And Scott Paul talked about the abundance mindset. And for me, it comes down to unlearning almost what I've learned about how money works, first and foremost, and actually how life works, right? I mean, there are certain laws of the universe. And if you think about it, the universe expands and it grows. I go back to, cities get bigger, people get bigger, all of that. And so this is not a zero sum game. And just because I make money doesn't mean that you make less money or that I need to be better than you or whatever. And once I really, saw that, and I didn't see any of this till I was in my late 40s, early 50s, when I watched my parents follow all the rules with the 401k and all this stuff. And I realized that the system, if you will. And, I went to grad school, and all I learned about was the stock market and analyzing, big public companies. And, we're just not taught this because there's so many people that are afraid. And so if I had to change anything, it would be, if I have one regret, it would be try to not being so afraid. And I think that it's the program that I was given to by society and by my family. And so that's why I do what I do. I saw this spaces, and I was like, I have to go in there, right? Because that's when I'm a real estate syndicator by day, but really my passion is helping people is talking about just this very thing. And that's why I started keepmore.com and all the stuff that I do, outside of this. And I've discovered cryptocurrency is another cash flowing, or it can be, um, assets. So, my safe money, I guess, is in real estate. My, you know, my real gambling money is in smaller coins, and my medium safe money, or what I believe is getting safer and safer the more I learn about it, is Bitcoin. So I think that I discovered the Safe Moon community, and this really is about being grateful and being willing to share. And anybody that sits on these spaces for 2 hours or whatever, you're willing to share. And that's a beautiful, beautiful thing. And it's a beautiful thing that we have. And, I got into crypto. Safe Moon Dreaming has been a good friend of mine for a long time. And I can't stress either for me, the power of not being afraid to hang around people that know more than you, and that that you can learn from. It really is about, they say either you're a product of the top 10 people that you spend your most time with, right? And so I'm just really happy to be able to spend time with you guys. I believe in this thing. I believe in Safe Moon, but I really believe in passive income. And you can buy real estate. Real estate's my thing. And you can buy real estate for appreciation, which is one way, right? And they're depending on a lot of outside forces. Or you can buy cash flowing assets. And I've done both, and I do both, but my bread and butter is really cash flowing assets. And that's how I got out of the corporate rat race. I was a working stiff, and my parents ran out of money, and thank God I was able to, in a position to help them a little bit. But, it's you know, we're just fed, and that's what's going on, I think, with the bunker mentality that the banks and our legacy financial system has. I mean, they're scared to death. They don't know what to do. And this is all they know. And it's all I knew. And it's all most of us know. We go to school, we learn how to be robots, and we get a job at Goldman Sachs training program or whatever. And that's what we know how to do. And so I think that the more we educate, and the more, people like you guys, run these sessions. I mean, it's going to change the world, and we can do so much good if we're not so afraid and selfish, which is what our governments are trying to do. They're terrible. They're afraid. So anyway, thank you all. I'm rambling, but I just really love this community, and thank you for letting me speak.
No, thanks for coming up, Polly. We appreciate it. Waffles, how are you doing?
Doing good. Can everybody hear me?
Yes, yeah. Fire away. Have you got a question?
All right. My question, I don't know. The thing that I'm looking at as far as going into the future here, if we moonshot or whatever, if it takes 5-6 years, at some point we're running into wealth. What does it look like mentally, or even strategy wise, to transition from work life into trying to live off of passive income life? Any kind of words of encouragement to transition that, as far as like being able to take care of a family. That's kind of like a big step and kind of risky, even thinking about it 5 years from now just feels kind of scary to think about, if we were to ever get to that point. But like, how do we transition into that lifestyle?
Yeah, FarmD would be a good one to come onto that one. FarmD?
Yeah, that's a great question. So I've struggled with that personally. I mean, I still do have a W-2. A lot of that's by, obviously by choice, but for the last year, definitely. But yeah, I've struggled with that some. And what I can tell you, and this will kind of go into a little bit about Bigfoot's question as well. And one of the things I wish I'd done earlier was network more earlier. When I went through that depression, I just stopped talking to everyone. And so that was a huge, huge issue, because, you know, the network is your net worth, all that great stuff, but it's so much more important than that. What I have found throughout my network is that I literally have not found one person that was working a W-2 that went into fully passive income and thought that they should have waited. They should have waited longer. Every one of them comes out of it and saying, I wish I would have quit my W-2 sooner. And now, again, that still comes, make sure you have everything paid and create these, you know, get these assets that will have cash flow, right? That can cover that. But you'll also find that you have more time to do other things. And some of that time can be distributed to building more wealth, right? So I think that's the important thing. And we make a lot of decisions off of being scared because it's the unknown. And all I can tell you is from my experience, and I finally got over that scarcity mentality about a year ago. And it's made me so much better at what I do when I choose to do that in general, because I'm not afraid anymore. I know that no matter what, and this comes back to when I've lost, you know, I've been a millionaire and then lost it multiple times. But the one thing I know about myself is even if I lost it, I know I can get it back. Like there's nothing that's going to stop me from getting that back. And so it just comes down to, there's a lot more to you than a W-2. Don't let a W-2 define you, you know, and you can't have your entire self-worth wrapped up into that. And so that's what I struggled with, especially with an identity piece of being a pharmacist or healthcare professional, and, you know, and again, never being able to make mistakes and all of this. And I'm like, it's all bullshit. It's all bullshit. You can change it. And you can decide, you can literally decide to look at it differently in the next second if you want to.
Is that what you wanted to hear?
Yeah, that was great. Thank you so much for that. Just as a side question, then as far as, you know, at what point do you start to feel, I know it's a mentality, but I don't even know if this is something you can really answer because it's so individual. At what point would you say, like, percentage wise, as far as like what your passive income is, would you say is like an okay, I can start to realistically think about flipping this switch as far as like what my expenses are versus what my passive income is?
I think on that, everybody's different. You know, from day one, you've got to set yourself a target. So, you know, some people will be living in a $150,000 house, $200,000 house. Some people will be living in a $2 million house. So you've got to set yourself a price target. You know, you've got to set yourself a profit target, reflections per day target, where you want to be in 12 months, where you want to be in 5 years, you know, income wise. And you have to write it down. If you don't, and in 3 months' time, all of a sudden you've got $50,000 or $200,000 in your wallet, you could easily press that sell button. When you see the zeros adding up, it's going to be tempting. And if you haven't got it written down, then there's nothing to stop you from pressing that sell button. And, you know, you may think, you know, $1 million on paper is a big number. You know, I can retire on that. But if you break it down and you do it in writing, $1 million, you take off your 10% tax, you're down to 900 grand. You take off your 20% capital gains in the UK, you're down to 720 grand. You know, I know the average mortgage in the UK is just under $200,000. So now you're down to 500 grand. The average debt in the UK is roughly 27,000. So now you're down to nearly 450 grand. If you're 30 years old, that'll last you 10 years. So you can't retire on $1 million. If you didn't have that written down, and then all of a sudden you've got $1 million in your wallet, you think, geez, I'm a millionaire, and you cash it out. And then in 10 years' time, you're going to be looking for a job. Yes, you haven't got a mortgage, but it's not as much as what you think it's going to be. So what I did, I worked backwards. So I thought, right, okay, I'm 15, 20 years away from retiring. What am I going to need per year for those 20 years? You know, factor in your nice holidays, factor in, you know, how many times you're going to go away each year. You've got no mortgage payments. So obviously that you don't factor that in. But you'd be surprised that $1 to $2 million, it sounds like a fortune, but if you're under 50 and you want to be living a decent lifestyle and buying yourself a nice car, then you've got to take all that into consideration. So when you look at your bag size and then you go into the volume of what SafeMoon could be in 6 months' time, let's say a billion volume, then you're going to need to switch it round because all of a sudden your bag isn't now 1 billion, it's now 2 billion. So you've got to do some careful calculations. You're in the space listening, we're talking about SafeMoon, crypto, but you've got to consider, in all seriousness, how much money you actually need to have like a great future. And it's not just for you. If you pull that trigger, you press that trigger and you've got $1 million, and then all of a sudden in 8 years' time, you're thinking, shit, I've got to go back to work and I've got no money now to pass on to my kids except for my house. You've lost that opportunity. You're going to look back like these people who sold their Bitcoin, and you'll be pissed off. So my advice would be write some figures down, write some targets, and that will stop you from selling at emotionally. You're going to be pressing that button. Katz, have you got anything to add to that? Katz is probably on Discord.
No. No, I'm here. For me, the way that I have everything set up is, well, right now, I know it's a feature that is asked of the team, is some sort of, at least from a visual standpoint, to have wallets on the SafeMoon wallet separated, so you can have multiple wallets for different things. So for me, right now, I have 7 wallets. Well, 8 wallets for different reasons. One is like the house, one is the rescue, one's my personal funds, and that sort of thing. So yes, right now I am kind of technically losing out on reflections if I had all the bag together, but that's not really the point. Is at the end of the day, these wallets aren't mine, so to speak. So I split mine up accordingly based on what it is. So I don't have to really think about so much the goal, apart from the different goals of what I'm trying to set out, because I've already thought of that and they're already split up accordingly. So when my house wallet hits my house goal, I sell that pays for the house. I still got separate wallets, etc. So they're all separate, ready to go for me, and that's the way that I've already thought. So you're 100% right when you're trying to say lay it all out, put all your cards on the table of what you want to achieve, what you want, where you want to be in the next 1 year, 2 year, 5 year, 10 year, and where you want to be when you retire. Okay, technically, yes, you could say you could retire at the age of 30, but where do you want to be at the age of 50, 60? Where is it you want to be? What do you want to do? Do you want to sit on a beach in Hawaii, or do you want to have your own running business that you can just leave and that's making you X amount a year in profit? You've got to have these goals set in mind. So if you've got those goals set in mind, you should be fine. But that go back to the actual exit strategy, doesn't it? And what Scott and Derek were saying before.
Yeah, no, exactly. Does that answer everything for you?
Yeah. Like I was thinking more pressing the button as far as like stopping work and living off the passive income, but I think what you guys said still applies as far as just having it, a plan set in motion. And once I get to that point, not so much an exit strategy, but just the conversion work life kind of strategy thing. But yeah, that makes sense. That answers everything that I have. I'll step down now. Thanks.
Yeah, if you've got it all written down, then you'll have your reflection targets in there as well, so you'll be able to see, where you're 3 months, 6 months, 12 months. I'm looking on the volume regarding, the SafeMoon volume and the reflections. That's your best way of looking at it. It's hard to predict, but I think we'll be able to predict it a lot more accurately probably in 3 to 6 months when we know exactly what's going on. But yeah, no, thanks for the question, Waffle. We've got Ryan next, and then RJ.
Randolph, hello everybody. Thanks for bringing me up. I was really trying to ask Scott a question, but I want to kind of circle back and really war game some of this with you, Randolph, Katz, and some others. So what we've done at work, and I'm blessed to work with some pretty bright individuals. So again, we're having this discussion based on SafeMoon, most likely, right? The success of SafeMoon. So what we've talked about is, so now we're in here super early, right? So there's a possibility based on SafeMoon being successful, that we all believe it will, that in the next, let's just say 1 year, even at mediocre volume, we could double to triple our bags. I've gone a little bit more conservative and said, if in 2 years I tripled my bag, where would I be? And then looking at your own personal finances is, how much do you have in your institutional 401k? For me, and others can talk about this, I'm looking at building up my 401k as high as I can get it in these next couple years. So I'm trying to time the 401k money so that when the burn wallet turns off in SafeMoon, and let's just say I've tripled my bag, and we have, let's just say, that $1 billion in volume, even if we're in a bear market, okay, what are my reflections looking at? If I were to quit my job, my house would be paid off with my 401k money. And then you could look at, okay, what are your utilities? What are your property taxes? What are these other things that you want to buy? And then kind of war game it out like that. So my question to Scott was kind of around the stablecoin aspect. So if you were continuing to work after the burn wallet turned off, and you were continuing to accrue reflections, let's just say from that second year to third year, to make sure that those reflections now are passing that 12 months in 1 day threshold, to ensure, because we don't have regulatory clarity yet on that. So to make sure that second to third year, your reflections mature to 100% be a long-term asset, and you were just to sell those reflections from year 2 to year 3. So now your house is paid off and you have those reflections. Let's just say it's $100,000 after taxes or whatever it is you have. Then you can really look at what your passive income would be. And I think that's really powerful in terms of SafeMoon, because now you can leave your tripled bag size. Let's just say that I'm being conservative in my opinion. And then you're taking those yearly reflections and living off that passive income, at the same time trying to let SafeMoon mature into that blue chip, to where it can mature to be $50, $100, $200, $300. And if you did decide to sell out, you've already made conservative steps so that you could live comfortably while allowing the asset to mature. So you would hopefully be able to cash in big time. And then that whole conversation about accountants and lawyers and getting your money into stable coins, like Scott talked about, at that point, you really need to be wargaming it from there. So appreciate you letting me speak. That's just kind of the mentality that I've been in, and having conversations with my coworkers. And hats off to Randolph. He's always answered my questions and spoken to me about things and keeping my confidence up. So just keep spreading the word about SafeMoon, everybody, and we'll get there. Thank you.
No, I agree. What we just said there. At the end of the day, it's not a short term pump. It's a company rather than a cryptocurrency. We're always saying that Bitcoin now, it's not really a cryptocurrency. It's a store of value, because it's that high that you're not in there to make millions unless you've got millions. Whereas with this, there's a future there of 3, 5, 7 years. And I keep coming back to it. You'll be kicking yourself in 6 months' time. I've screenshotted some troll that came into one of our spaces a few days ago, and he was laughing because he sold at X3 when it was 0.4. So I'm really looking forward to 6 months' time. Just giving him a DM with how much it's paid and how much he's lost.
I remember that guy. I remember that guy, Randolph. I feel bad for him because he's going to end up losing out.
Yeah. I don't feel bad for him one bit, and I will look forward to messaging him in a few months' time. Okay, who have we got next? We got RJ. He's been waiting patiently with his hand up. How are you doing, RJ?
Hey, I'm doing great. I really appreciate it. Can everybody hear me?
Yeah, fire away.
Okay, perfect. Thanks. So I'm a practicing attorney for about 25 years in high finance, and what I want to share a few things that has come up throughout this space talk, which I appreciate you having, and thanks for letting me have a moment to talk. First, my personal opinion is that I think you should work through your W-2 income until you really can't take it anymore. That's just a general perspective. while you're doing that, improving your lifestyle, improving the things that you do and surround yourself with, you're going to increase your passive ability to uh, receive passive income, as well as to increase your lifestyle just in general. That being said, um, the the best advice that I could give regarding passive gains and when it's time to retire is that you should set a budget, right? So it's less based on your goals and anticipation, but it should be based on a budget. Look, I need to pay for my children's college. I need to pay for my daughter's wedding. I need to pay for my parents' home. I need to buy these things and that things, and you know your budget is. So with respect to taxes, et cetera, once you know your budget, then you can make a decision regarding whether or not you have enough passive gains. So I think your advice was really great on having goals and aspects of what those are. Wonderful. But if you have a budget and deal with it from a business perspective with a budgetary concern, then you can understand better as to how your passive in gains are going to fulfill what you have on a budgetary scale over a lengthy period of time. So that's all I had to say about the budget side, or the transitioning from W-2 or earned income from whatever, whether it's sole proprietorship or a company, or et cetera, whatever it might be, to passive gains. I think having a budget is a much better perspective on gaining that. The second thing is that I wanted to talk about is we spoke a little bit about living off of loans or loans on assets. Now, over the last several years, I've probably done more senior convertible notes or convertible notes in the corporate industry than I have in probably 20 years prior. The reason why we're doing it is because interest rates are significantly low. As the economy's turning, and I think we all can agree on that interest rates are increasing, irrespective of how you feel about inflation or politics. We don't need to really get into any of that. But the real relationship with our money is based on interest rates. As they increase, we have to be careful of predatory lending, so that when we use our assets, whether they're equities or whether it's crypto, the nature of using those equities to live off loans is going to be based wholly upon the interest rates. We've had such incredibly low interest rates. Now, and again, I'm not speaking in relation to SafeMoon or reflection tokens or cryptonomics. That's obviously going to have to offset and be factored into the determination whether the interest rates are going to be offset by your gains in it. Not speaking from that perspective. Like, for example, Elon Musk has been living off loans on his equities for a lengthy period of time. But over the last, week, 2 weeks, he sold off $1 billion worth of equities. The reason why he's doing that is because inflation is increasing at a rate higher than what it would be beneficial for him to be paying interest on those convertible notes, and capital gains being converted from long-term to short-term capital gains, et cetera, et cetera. Again, my point to you is this: just be careful. And RJ Adonis spoke about this. Patron spoke about this. When we have to understand whether people around us are being predatory, how do we keep our money? That is making our decisions based on who we talk to: attorneys, accountants, set up trusts, put the trust in a family trust, so that you have a professional fiduciary be the trustee. Those are all concerns that I think really need to be understood. And the best advice that I could give, and I can't get into a ton, right, because of what I do, but the best thing that I could tell you, and I hear everybody was talking about the things they wish they had done differently. My advice to you is, out the gate, talk with professionals, talk with your banker, talk with your lawyer, talk with your accountant. If you don't have one, get one. Because if you're in SafeMoon, if you're in the crypto space, you are early, you are going to be finding newfound wealth. You're not going to know what to do with it. Talk to professionals. So I know I've thrown a lot out there. That's all I wanted to say, and I appreciate your time.
That's great, RJ. Thanks for the info. Founder, you wanted to add to that?
Absolutely, that was great. So always have to know the landscape, right? So things are going to change. They're always changing. You have to keep that in mind. I've gone through a couple cycles. So when I got out of school, I took out as much in student loan debt as I possibly could, because the interest rates were really low at that point. They've gone through a cycle now where they've gotten really high. Now they've come a little, they've come back down again. Point being, I was in the stock market doing stuff, which, I mean, I'm not saying I recommend that at all. I'm saying that was something that I did. And I knew that money was cheap for me at that time, and that this was one of the few opportunities in life that I would have to get a loan so cheap. And what happened was I could have paid off my student loans as soon as I got out of professional school. But I stopped and I thought about it, and I did the math, and it would have created a tremendous opportunity cost for me to do that. But that was the landscape then. Okay, so it could be completely different now. And so you have to keep that in mind. If interest rates would have been really high, I would have paid it down. But at this point, as it stands, if I have student loans less than 2%, I'll take all 30 years I'm not giving them a penny early at all, right? Because again, opportunity cost, that decision has made me millions and millions of dollars. And you just have to understand that it completely depends on your situation, your timing, and understanding the landscape is so important. So I'm glad he touched on that. The other thing I will tell you is just to backtrack a little bit. So the banking system, the financial system, was built to keep you in a certain place, in a caste system, right? So when it comes down to W-2s, it is hilarious. Okay, so I can go into a bank and say, I have $5 million over here that I'm willing to move over to your bank and have it just sit there. Okay, and I will get, and then but I don't have a W-2. They're not going to lend me the money. I've already run into this problem, right? So I've gone to bank after bank after bank. Every bank has their own little sandbox, and they think you're nuts if you're not in that sandbox. So one, you have to search around for banks if that's the case, right? If you have to deal with them, you find a bank. There is a bank that will probably do what you need them to do, but the days of working with one banker are way gone. They don't even exist anymore. So you have to search around. But if I have a W-2 and I'm making $100,000 a year, they'll give me all the money I want. It doesn't matter. And you have to keep in mind this idea of having a W-2 as being safe, as having a guaranteed paycheck. It's all crap, guys. I mean, you are no safer having a W-2. I mean, that's the problem. And that's why I say it's built to keep you at a certain place in the financial world, right? So and it's very difficult to break out of that. So until you understand what game you're playing, you won't break out of that. And it takes taking some chances here and there, but they have to be calculated. And you really have to know where you are and what the future has in store for you. And that's why, again, I agree with both RJ and Randolph. You've got to look at your situation and build it from where you want to be and what lifestyle you want to live, and work that problem backwards. And you'll get those numbers that you need for your goals. And then, if it's adding 15 to 20% or more, whatever you think is going to be you need to do, add that on top as a buffer. Just think about those kind of things. But understanding those specific pieces to how this game works is so important.
Yeah, that's absolutely correct. I really appreciate that, Farm D. You're right on the money. Well, I'll say this. I think the W-2 income actually is a really critical component in order to move forward in a lot of young people's lives. And that's why I say keep that W-2 income as long as you can, because you need that relationship with banks as it stands right now. The kind of money we're talking about, obviously, in the crypto world is in excess of what we've already talked about, the FDIC insured portions. So you're going to have relationships with multiple banks. When it comes to that kind of a perspective, dealing with multiple banks is a great thing. But as it relates to that specific portion of our discussion, if you have the W-2 income, you're certainly going to get credibility with the bank as it relates to regular income being capable of supporting whatever it is you want from the bank. As you start to increase that passive income to either exceed, whether it's equity dividends or whether it's real estate, rents and receipts, or whether it's cryptonomics, whatever those passive income aspects might be, if you can illustrate that that's regular, then you don't need the W-2 income. So you're right on the money. Last point I want to make, and I appreciate this, I want to stress it a little bit more. It's very, very important that all of you consider trusts. Okay, charitable trusts. We all talk about the things we want to do, right? But the best way to make sure that the wealth stays within the organization that you intend to donate it to is through a trust. The best way for you to make sure that your family's taken care of is a trust. So those of you who are talking about having family come out of the woodwork, well, yeah, absolutely, they're going to. The best way to do it is have a professional fiduciary banking institution set up with a trust. So pass that on. I don't have any more time to stay up here, but again, rely on professionals. Many people just simply don't have the ability to do these kind of things on their own and aren't savvy with their money. So again, all I would say is talk with professionals, talk with a lawyer, talk with estate planners, talk with financiers, talk with accountants. So again, thanks for the space. You guys are wonderful. I'll always be around.
No, thanks for coming up, RJ, and giving us your insight as an attorney of 25 years. It all helps. Thanks very much. Crypto.
Hey, Randolph,
Yeah,
real
yeah,
quick.
fire away.
I'm so sorry. He pointed out something too. Again, I meant to say this in my spiel, but like the one thing that is a big misnomer, rich people actually don't own jack. So that's the funny thing, right? So everybody says, oh, well, they have this and this and this. They don't own it. They control it. And that's what he's talking about with a trust. Okay, so there's a huge difference there. And it all comes down to liability. So definitely everyone read up on that stuff. And I wholeheartedly agree with what he's talking about there. It's a way to protect yourself because you don't want any one incident or one thing to take all of that away. And so that's a big deal.
Yeah, no, you're right. There's a lot of talk about trusts, and we need to go into that in more depth in another space. Crypto fanatics, you got your hand up. How are you doing?
Hey, Randolph. Hey, everyone. Thanks for putting this on for us today. Some excellent information and much needed information actually being passed around today. The question I wanted to basically touch on, I think it got touched on earlier. RJ asked this question perfectly. He nailed it on the head. Was about the off ramps. So I'm new to this space for less than a year, and I haven't skimmed any profits off any of my projects. If we were talking strictly, say, SafeMoon, and I knew my exit point, say in the next 3-4 months or whenever we are all expecting all this to go where it needs to go, at the grassroots level, if you wanted to dummy it down for us, what would be the best way for like do we convert it to BNB, a stable coin, to transfer it to our bank? And are there any limits? And what do we basically need to do to initiate on our end after we've done our part in doing what we need to do? If that makes any sense.
Yeah. Katz, do you want to take that one?
Can you just sum that up for me?
You're breaking up a bit. Say that again, Katz.
Oh, just ask if you could just sum the question up for me, please.
So basically the question was for somebody that's new and haven't skimmed any profits off any of their projects, and the simplest and easiest way to take some profits out through either BNB, converting it into BNB, or a stable coin. Which stable coin, or like what do we need to basically do to initiate it with our banks that this is what we're about to do?
So, off-ramping, you are going to need an exchange. However, there are some services that you can just sell directly to them. So that may cut out moving the funds directly, and you can just send it direct to a sell. I know MoonPay does a direct sell with Ethereum. What was it? Ethereum, Bitcoin, and I think it's some Ethereum, like USDC blockchain coins. So the first process is knowing what you've got to take your coin out of. So what blockchain are you on? So if you're SafeMoon or any sort of the Binance Smart Chain coins, you need to put that into BNB unless the exchange itself offers a token. So you could say for SafeMoon is, right, well, I have SafeMoon. Why would I want to switch to another token to then sell? So what you can do is just send that SafeMoon to the likes of Bitmart or I'm trying to think off the top of my head, Gate.io, and with V2 you'll be paying 2%, which is a lot more reasonable than the 10% for sending. So that 2% comes into play. Happy days. You then convert that, and the exchange will have that process to turn that to the US dollar, the GBP, euro, or whatever it is. So it's just knowing where you're going and which place you're looking to withdraw from. Once you know where you're withdrawing from, and if you have an exchange in mind that you're already completed KYC with and everything like that, then that's where you want to start, and then you can follow it back. Okay, did they list the coin that I'm trying to sell? No. Okay, so did they list the actual blockchain coin that I'm trying to sell? Okay, no. Then that's when things get a little bit, confusing, where some, let's just say the exchange like Coinbase, they only realistically deal with Ethereum side, and if you're on the Binance side, you've got to find a way to get to the Ethereum blockchain. There's a few ways to do that. You've got bridges is one. You've also then got exchange to exchange, so you could go through an exchange to get to that exchange. So learn the path, work backwards. Where are you selling? Follow the path, and if you can then cut that down and cut down the fees to get out, then do that. But start from your exit point and work backwards in how you get there.
The other way, obviously, if you're a newbie and you are looking at like a 3 month or 6 month, listening to these spaces every few days, these questions will come up over and over again. But specifically ask in a space, I'm on Bitmart and I hold SafeMoon and I'm looking to get out and I want to do this and I want to do that specifically. Or I'm in Binance or Coinbase, and then you'll get like specific answers on what. Which path to take, because it'll be different for each country, it'll be different for each state, it'll be different for each exchange. There's so many variables. Unless you give your exact analogy of where you want to go, it's difficult to answer. So when the time comes, say I wouldn't be looking at 3 months. You want to be looking at this is a big opportunity where you don't want to lose out on taking a big gain in a few years' time as opposed to 3 months. But look at your look at what you need to be doing in 12 months' time with the exchange that you're actually on, and in the near future you're going to be on the SafeMoon exchange with the SafeMoon blockchain, and your answer then is going to be different to your answer now. But thanks for the question.
Yeah, no, thank you. Yeah, no, as far as the timeline is concerned, yeah, it's definitely a long-term project, and I'm from Canada, I don't really see much love shown here from Canada. So I also wanted to just come on here and thank each and every one of you guys, because I've been tuning in. Like, I'm addicted to these spaces, right? So each day I'm learning something new from all of you guys, and I never see anybody show any love from Canada here. So I just wanted to come on here and tell you guys that we're here as well, and we're supporting everybody on and getting everybody on board here.
There's loads of Canadians in here. I'm in a direct message group with Rocky Man and a couple of others who are from Canada. So there's plenty of Canadians in here. Don't you worry.
All right, perfect. Thanks, Katz, and thanks, Randolph. And I'll be coming on here if I got any other questions. You guys are great.
Yeah, no worries. Safo Cat is next, and then DC Kings. Safo Cat, how you doing?
I'm doing good. And Katz, I'm really glad that you guys are hosting this. This is a much needed discussion about wealth, because there's a lot to learn about newfound wealth, because it's not all of us that have had the opportunity of having millions of dollars and knowing exactly what to do with it. And this discussion and future discussions about wealth management is very, very important. For me, I am not in a hurry to cash out at all. I've seen the potential of this project. I know eventually SafeMoon itself is going to be a storage of value. You don't need to get out of the ecosystem. If you are thinking about this for long term, it's gonna get to a point where you don't see the need of cashing out. You just use the ecosystem that is already there to do different transactions and stuff. I want to turn this whole investment into an asset that keeps making me money over and over and over. So why would I want to cash out of it and try and do something else? So that's just my take. And from all the other people that have been talking about professionals and stuff like that, it is important for us to all educate ourselves about exactly what we need to do when we come across money, because money has a tricky way of slipping right through your fingers if you don't plan appropriately. And that's just something that we all have to learn. And I'm glad we have this space that will give us the chance to know exactly what we need to do when the time comes. Again, for me, I'm not in a hurry. I've decided I'm gonna keep working, doing my 9 to 5 job or whatever that is there, and keep paying my bills like nothing happened. You know, is to create generational wealth. It's not about me anymore. It's what are they gonna do? What are they gonna have? The short-term expenditure on cars and house and all that is gonna eventually come. I want to be able to have a house or a car or whatever and still have something making me money. I want to be making more money than I'm spending. That's the trick. I don't want to be like, oh, I had $100,000 in the bank, or I've made $100,000 and then take it out and pay the bills and I'm back to square one. I don't think that's what every one of us in here wants to do. That's just my take. So.
Okay, cool. Thanks for coming up. Sunshine, have you got a question? Sunshine, you got your hand up.
Yeah, hey guys. I've been in and out of the car out running errands for my wife. She just had complete knee replacement not too long ago, and she's not up and moving real good. But anyhow, I came in at the end of a conversation a while ago where I think y'all were talking about trust funds. Is that correct? And if so, could you tell me what y'all's take on a trust fund is?
Farmdy, do you want to touch on that? What we're going to do, we got 2 more speakers up, and then we're going to shut it down because Farmdy's going to need to go, and we'll have been on for nearly 3 hours, so we'll just take a couple of more. So yeah, Farmdy, if you want to have a go at that one with the trust funds.
Yeah, the short answer is absolutely. It's a tool to use. I have one. Most of your individuals, once you get past a certain amount of wealth, it becomes very advantageous. And again, the whole point of that is to limit liability, and also kind of sets up how you're going to distribute your generational wealth, and kind of that's how I look at it anyway. But the important thing there is that you can still control everything, right? But you just don't own it, and that's super important because it also lessens the chance that someone will come after you individually. It's not a guarantee, of course, but even worst case scenario they did, then you only own so much, and so for the big part, it does decrease your liability, and you really want to protect that stuff. So I wholeheartedly say to do that if you get to a certain point. I've heard different numbers, as to when the trust is a good idea, but the one that gets thrown out the most is once you get to about $1 million net worth. But I've heard it clearly being a tool for someone that doesn't even have that yet. So I think it just comes down to what you're doing and what your goals are, and setting it up ahead of time is imperative. And keep in mind, you can always adjust that, but getting it set up in the beginning is certainly a chore. But you want to reach out to those professionals, you're an attorney especially, that can help with that. And if you have someone that is a financial advisor, if you can get all of them connected and talking together, that's the best way to do it.
Right. Yeah, I've been researching trends, and that's why I thought I'd ask somebody that was maybe a little more experienced. But my thing is, say I get to 10 million, you know, and you got to pay the 20% plus another 10%. That's 30 off of that. Okay, so I'm just going to say 50%. So that leaves me with 5. So I take $1 million. That pays off all my bills, buys everything I want, and then I got $4 million to put back in a trust fund. And in America, trust funds draw between 7 and 11% a year. Just at the low side of 7% of $4 million is $280 a year, and I can easily live on the little over 200 a year because I already don't owe anything. You know what I mean? But I just wanted to get somebody else's opinion on it too, and kind of see what they thought.
We'll read into it as well because there are some aspects to and certain pieces, right? So it kind of works like plug and play, right? What you need in the trust and what you don't need in a trust, and so no one trust is usually the same as another. You take pieces that you need to incorporate in that trust for you, and you can add other pieces later if you need to, but there are some cases where regarding some qualified retirement plans and stuff like that you can snuggle under that trust that you can actually put back more than what you would be putting into a 401k at a W-2 and some other things. So just some things to think about. It's a really, really deep rabbit hole, but I do encourage anyone in this room to start going down that rabbit hole and be prepared to do one of those.
All right. Thanks. Thanks, Randolph, Katz, everybody. Thank you all. As y'all know, I'm pretty much in all the spaces here and there, but anyhow, y'all have a good day. I got a bunch of stuff I got to do. Thanks.
Thanks, Whiskey. Not sure where Randall's gone. So go ahead, Russell.
Hey, Katz, how you doing?
Yeah, not too bad. Yourself?
Yeah, not too bad. Fantastic space today. Obviously, it's great that you guys are putting this together. I feel, and I would imagine that most people that are investors for the long term are glad to see that there's some structure being put to some of these spaces. I think every space adds a different angle of value, but I think it's important as we go forward that there is more structure in the conversation in certain spaces. So this has been a great space, and it's been great to have some professionals giving their views, giving some answers to the community. So thank you for that. What I wanted to just sort of add to the conversation, really, from my experience, was around a couple of things. One, being disciplined. I think that's really important. We've heard a lot about people recommending different ways that we can manage the money using professionals, but in ourselves, I think we need to look inside and be disciplined. In the spaces quite recently, there's been a lot of criticism and impatience. So really, just in all areas, being disciplined within ourselves. I think outside of our investments, also look at what we do with our money in general. So I think that's key, because if you're not disciplined now without money, how are you going to deal with that money when it does come? So I think discipline is a very key area. Obviously, goals have been talked about. So if people truly believe that newfound wealth is going to come their way, they need to be looking at what their goals are, and everyone will have different goals, whether it be for themselves, for their families, to start businesses, to be charitable and such. So it's same in all areas of our lives. It's a good, healthy discipline to have to actually be setting goals anyway. So set goals for your money, set goals for your life. I think that's a key attribute that we need to bring to this. And obviously patience and flexibility. So, the world is ever changing. We've got things happening in the world right now. In the UK, we've got extremely low interest rates. Things can change. We've got regulations that are going to come into this as well. So I think not only setting plans, but also reviewing those plans, being flexible around those plans, and also prioritising the things within those plans. So, you know, we frequently hear the when Lambo or whatever it is that you're hoping that the wealth is going to provide for you, but really look at, once you've set down those goals, prioritise those and make sure that we understand what's most important to us. So I just thought I wanted to add that to the conversation. A fantastic conversation today, and really appreciate Randolph putting the space on. Obviously, Katz, you do a fantastic job for the community. Congratulations on seeing your new role. But yeah, that's what I wanted to add. So thanks to everybody.
No, I appreciate that, Russell. You're 100% right. Is you hit the nail on the head with self-control. And the big part of that is the education side. And that's why me, Randolph, they've got Gandalf. There's a few others in the community that are running these sort of spaces. And not just on Twitter, but across the board, because, again, there's multiple platforms for all types of crypto. You've got Telegram, Reddit, Facebook, you've got the Discord. All these people need the education to be able to explain to them, which will then be able to go right, and then they're able to make that decision of self-control. So once they know the information, they can go, right, okay, so instead of me just going, oh shit, there's $100,000 in my account, that could be life-changing for me. But then you could actually say, well, okay, well, I've actually learned this, and I've actually learned this, and I know that this could easily be doubled in the next 6 months if I hold on to it, and then that could be life-changing. So it's 100% this cycle of education, self-control, and then following the plan that you need to have. You need that plan. So whatever your goal is, whether you're in crypto long-term, or if you're just in crypto right now to solve maybe some short-term problems, great. Whatever your goal is, stick to it and stick to your game plan, because that is the key to your future, essentially, is that if you start to put your emotions involved, that's when it starts to get messy. And you've seen a lot of people with emotion, and they do lose a lot of money because they just panic and they go, oh no. And yeah, you're 100% right.
Yeah, definitely. And I think, you know, yourself, Katz, so you're building out a fantastic education platform that's just going to grow and expand. I say to people as well, self-educate. You know, we spend a lot of time in spaces and discussing and such, but there's other ways that we can self-educate. You know, there's some fantastic books that I've read in the past. One that springs to mind, The Richest Man in Babylon. There's some really fantastic financial education out there. So, you know, I would say for anyone that doesn't have a great education in finance, you don't have to be a CPA or a financial analyst, but, you know, maybe take a few steps to educate yourself along the way.
Yeah, thanks very much, Russell. Last question then from Watt ? And then we'll wrap this up then.
Thank you so much, guys. I really appreciated what I learned today. It was really informative and all that. And but I have a really specific question, and I guess if many answer it, that would be really nice, because that would be better to hear about different perspectives, how they handle it. I mean, no one what I think right now, how to stay humble if I become a millionaire. I mean, right now I'm thinking, yeah, I'm going to do that and blah, 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 and charity and spend a lot of money on those and that and that. But I think when I think of that sometimes, and right now at this moment, I feel like I'm getting scared that, oh, okay, suddenly I see that million or maybe whatever amount, like that huge amount that I've never seen before, can freak me out. And like, I don't want to be that dude to have diamond teeth and those diamond, necklaces and rings and all that. But I think that if I see all this money in my wallet and all that, I think I won't be able to control it. What do you guys suggest me, or the people who are listening here, to have, like, and Russell even talked about it, to have self-control. You guys said, yeah, self-control, but how you have that self-control, how to achieve that level to have a control to manage everything properly, because it's quite scary for a lot of us. Thanks.
I think the point that you're already talking about it, you're halfway there. When you listen to people in the spaces, and you can tell who's going to be the first person to go out and buy a Lamborghini, and then the following year they're not going to be able to afford the insurance. Everyone's different. Everyone's got different personalities, and just the fact that you're worried about it and talking about it now shows me that you're going to be not headstrong and go out tomorrow and buy a £200,000 Range Rover. It's everybody's preference is different. I think you can only plan it to a certain extent, but as you said, when you get those notes start accumulating in your wallet, you're one of two people. You're either going to go out and spend it, or you're not. You're going to invest and you're going to be sensible. There's no middle ground. You're either emotional with the money and or you're not. It's there's no fine line. And because you've brought up that question, to me shows that it could be a year, 2 years before this occurs, and you're already thinking along those lines. So there's no hard fast rule. Family, what are your thoughts on that?
Yeah, that's another really good question, and I agree. If you have the self-awareness now, and if you don't have the self-awareness now, get it, find it somewhere. Couple of things. I mean, you can. Sometimes we have to break it down to simpler steps, right? So if you require yourself to have a cool down period before you buy something, that's an option, right? And you can focus on that. You really, really want something, but you know what? Maybe you need to wait 30 days before you make that decision. And if it's something that you still really, really want, and in 30 days, then maybe that's something you look at more seriously at that point. Strangely enough, even to go down that route, there's things where you can actually lock your money up for X amount of time, right? Now we have smart contracts, so there's ways to lock that up for periods of time to give you a cool down period if you want. But I think just having the right people around you, making sure that your network is the right network, I think it's going to be incredibly just really, really important that everyone understands. I think someone mentioned it earlier about the 10 people that you're around the most. You're kind of the average of those 10 people. And that's really true. I spend money every year to be in mastermind networking groups that, in this case are all accredited investors, but it's not about just the wealth. It's about, your mindset. It's about health. It's about relationships. It's about giving. I mean, I get challenged on things that, and I'll challenge others on it. And it's all coming from a good place, but you have to have some sort of accountability partner, right? I think we all need that from time to time. It's just, you have to make sure that comes from the right place and that you have a true understanding. And the other thing I'll add to that is, it's pretty easy to stay humble if your goal in life is to always give more than you receive. I'm really bad at receiving, and I've had to work on it. But I've always wanted to give, and sometimes we need to be able to receive things, and it's because it's healthy. But I think if you have the mindset that you're always going to give more value than you receive, shockingly, the universe listens. Okay. And it comes back around like tenfold, in my experience. And so you just have to wrap your mind around, I'm just always, always, always going to give more than I receive. And so I think that's where I come from and how I keep that level head. And I'm constantly self-aware. I do like a miracle morning, where I go over my goals. I go over my, certain things that I'm working on. every single morning, every morning. There's a great book out there by Hal Elrod called The Miracle Morning. And it's just, there are certain things like that I build into my routine, and I live off of my routines. And so if you build the right routine, I don't think you're going to have a problem at all. But when you just start living life, flying by the seat of your pants, and you don't have any structure to that, I think you can get into a really dangerous area and a really dangerous spot very quickly. And that doesn't mean don't have fun. Don't live life. That there's a balance there, right? And finding that balance is what we've all tried to do. And I think you find it as you become wiser. And I don't say older, I say wiser. And you only get wiser by being self-aware and listening to that voice and your subconscious a lot more, and being in tune with that. So
that's a great answer, Famdi. Is that okay? What?
Yeah, thank you so much. It was really nice and detailed answer, and looking forward to hear you guys more. Thank you so much, and have a nice night.
No problem. No problem. We're going to call it a day. Just want to thank the panels for coming up tonight. We had my friend that was sitting next to me for an hour and a half. I just want to thank him. Derek, obviously, for connecting the dots, getting himself and Scott on here tonight. The insight into the the inner workings of how those guys work and moving forward with cryptocurrency in general. Scott, obviously, he spoke for quite a long time tonight. I think he was on for nearly 2 hours. So thanks for coming on the space. Awesome advocates for for SafeMoon. I know they're opening a lot of doors for John and the team. It's good to have the Satama guys in here, Ninja and them, and Hodler from the Shib Army. We've got Farmdy, who's been on here all night for 3 hours. Great insight into what he's done over the years, and the knowledge that he's acquired and passed on tonight is invaluable, because you've got to go through stuff like that to get that knowledge. So thanks for coming on, Farmdy. It's been great having you on. And Katsaras, obviously, as always. Again, congratulations on your new position, and hopefully speak to you all in the next week. I know what we're going to do a space in 2 weeks' time. I've got a tax professional who he's a professor at Oxford University in the UK, and so he's going to come on. I'm going to try and get somebody specific for the US, because I know a lot of US people are on here. There'd be no good talking about UK law when 90% of the crowd are in the US. So hopefully try and get somebody from that angle on as well. So thanks for listening, and see you all soon. Thanks very much.